Hello students, welcome to rest of our CA and CMA classes. Myself DV Subramaniam, qualified CA, CMA and registered valuer. And I am your faculty for paper 5 Business Laws and Ethics. I'm going to start company law which is having a more weightage, 40 marks in your paper 5. So let's begin our discussion with company law. Before starting, what is the company, what is the law? Just answer a few questions. A person is there for survival, he need money, so he need to earn income. Now he is having two options. One is working under employer, simply employment. Second one, starting his own business. In employment, he will get 10 lakh rupee per annum. Imagine, he will get 10 lakh rupee per annum. So starting a business, it is a risky option first of all. Yes or no? Employment, definitely he will get an income on periodical basis. Starting a business, a risky option, definitely his expectation will be more and more. Now where there is a risk, reward will be more. More the risk, more the reward. Less the risk, less the reward. Yes or no? So here he can expect some 20 lakhs per annum. Now business point of view, you can observe a turnover, so sales or service income less expenses. The result would be net profit, nothing but income. Turnover, imagine if it is a 1 crore. The expenses some 75 lakhs, net profit 25 lakhs. Now when turnover is more than 40 lakhs, so he is subject to GST. He is liable to collect GST and he is liable to pay GST to the government of India. So imagine GST rate is 5%. So 5 lakhs on 1 crore he need to pay GST of 5 lakhs. On net profit, imagine he is liable to pay income tax of 20%. Now government is going to get another 5 lakhs. This 5 lakhs is indirect tax, GST. This 5 lakhs is a direct tax, income tax. Now GST is levied on the turnover. Income tax is levied on the net income. So government is getting 10 lakh rupee income when he start a business, when he perform well in the business. Now coming to the employment, here also applies same taxation rules, same taxation rate. So government is going to get how much amount? Just 2 lakhs. I assume that income tax rate is 20%. It's not 20%, but for the time being 20% in our example. And moreover, my dear students, if he start a business, he can create job opportunity. So many unemployed people will get job. Yes or no? Yes, sir. So they are also getting some income. Yes or no? Yes, sir. So that means in this 75 lakhs, at least 5 or 6 employees are getting some 5 to 6 lakhs each person. Now tell me, my dear students, from economy point of view, from country point of view, which is more beneficial? Obviously business, because government of India is getting 10 lakh rupee taxes. First point. Second point, yes, unemployment will be reduced. Many unemployed people will get job opportunities. Yes, sir. So you are correct. So selecting business is the best option. No, selecting business is best option. I agree. But in what form of organization he should start a business? Option A, sole proprietorship. Sole proprietorship. Coming to the sole proprietorship concept, you'll find only a single owner and a single manager. He is the person who invests money in the business. He is the person who manages the business. Complete, business operations will be under the control of a single person. From advantage point of view, no need to share profits with someone. Complete profits belong to him only. Disadvantage point of view, limited resources. A single person, how much amount he can invest in a business? Whatever he had, whatever net worth he is having, that much fund only he can invest in the company, nothing more than that. So tomorrow for expansion, can he provide additional funds? I didn't think so, because he's having a limited net worth, so he can contribute that limited net worth into the business. He can invest that limited net worth into the business. That's it, nothing more than that. Can't invest more funds. So whatever he invests, it might be in loan form, so borrowing loans from the banks, he will invest in the business, but that is having a repayment obligation. Correct. And moreover, In sole proprietorship type of organization, the business entity and the owner both are not different, both are same person. The business entity, establishment and owner, both are one and the same. So tomorrow, if he doesn't perform well, tomorrow if he didn't perform well, so the amount invested by him is 1 crore and the market is not favored to him, and due to change in environmental factors, he's incurred a loss of 5 crores. He suffered a loss of 5 crores. That means what is the consequence, ma? Capital 1 crore, whereas loss, profit and loss account debit balance 5 crores. That means he is having a debt of 4 crore rupee. Whatever amount he invested, it became zero. And additional, he need to contribute 4 crores. He need to pay 4 crore rupees to the creditors. So that means in the event of closure of the business, whatever losses he is having, so to those losses, not only his business assets but also personal assets are responsible. Am I correct? Yes, sir. So we call it as unlimited liability. So unlimited liability is nothing but, so in the event of huge losses, not only your business assets but also your personal assets are at risk. And one more point I want to add is sole proprietorship type of organization doesn't require any registration under any law for the time being in force. So it is like an informal commercial establishment. Now, a person with good intention, he will do the business and he is responsible to the creditors. He is accountable to the creditors. Definitely, he will repay all the money to the creditors. But do you think all people will have a good intentions? No, sir. Definitely no, sir. Now, a person with a fraudulent intention, what he will do, sir? He will take loans from the creditors, bankers. He will accept advances from the customers. So we will provide products to you after a month, sir. So please pay money in advance. Yeah, I'm having a client, ma. So he is engaged in a generators business, purchasing and sale of generators business. One day he observed that many people are earning a lot of profits in the stock market. So this person is also having a plan to invest money in the stock market. So he received advances from the customers, to purchase generators and to install generators at the client location. Now what he did, almost 10 advances. Each advance rupees some 5 lakhs, 10 advances, 10 into 5 lakh, 50 lakh rupee. So he took 50 lakh rupee from 10 customers and he invested 50 lakhs in the stock market in futures and options. At the end of the day, that 50 lakhs become zero. Yes. So if he invests that money in the shares, today or tomorrow he will earn something, but he kept all the money on the derivatives. So it's like a legal betting agreements. So that is not our concept, but I'm telling you, futures and options, derivatives. So he invested 50 lakhs in the derivatives. At the end of the day, what happens? That 50 lakhs became zero. Now, do you think that client is still doing that business? Do you think client is still residing at his home? No, he ran away. He's not traceable at all. Till today he's not traceable. Now just think about the creditors, just think about the customers who paid advances. Is it a loss to them or not? Yes, sir, it is a loss to them, sir. And since there is no law which requires a sole proprietors to register, therefore there is no control over sole proprietorship type of organization. So from owner point of view, risk, unlimited liability. From public point of view, risk. This person, there is a chance that he may close the business, he may run away. May run away. Yes or no? Next one. Next one. You and your friend, two of you had a both same objective. No, you both had a same objective. That means sir, we are in a plan to start a business. Our business is simply manufacturing of paper plates. Manufacturing of paper plates. Gross profit ratio is 50%, sir. Net profit ratio is 30%. Now we both of us, sir, we are two members. So one will take care of marketing activities, the other one will take care of manufacturing activities. So okay, fine. So you two people approached me and you're asking me, sir, what type of organization is suitable? No, I'm explaining you. Sole proprietorship, no, not feasible here, because two owners are there. Sole proprietorship means only one owner. Now, you two people, you formed an association, you're contributing something to the business. and you are doing business at the end of the period, say for suppose monthly or quarterly or annually, you're making calculations, you're preparing financial statements. Based on the result, you're sharing profits, you are bearing losses. So compared to sole proprietorship, here the advantage is some resources will be increased. One person, if one person can contribute 1 crore, two persons can contribute 2 crores. So that means, resources still limited, but you will find more and more resources, more and more resources. But think about disadvantages. The disadvantage is unlimited liability here also. Why, sir? Association of persons, and the persons in that association have no legal recognition. Only the persons had legal recognition, but whereas that association had no legal recognition. In that case, what is the consequence, sir? If business perform well, if people are doing business well, definitely you'll get a good result. Definitely, so profits you can share. Imagine one of the partner is not working properly. So manufacturing point of view, that person is negligently doing the operations. As a result, good pieces is to damaged pieces. The ratio, it is becoming very very less. So number of good pieces is less than number of defective pieces. Now what happened? A lot of money which you invested in the business, it will come down. At one point of time, it will become zero, and you will find negative net worth of the entity. Now, the other person can't claim any action on the first person. Why? Because there is no legal recognition. You didn't register under any act. Sir, partnership type of organizations, can we register? No, sir. Yes, I agree. But there is no mandatory provision. No need of registration to the partnership type of entities. Simply, taking five stamp papers, 500 rupees stamp papers, drafting on the 500 rupees stamp papers, writing an agreement, which is popularly known as deed. That's it, sufficient. That's it, sufficient. In court of law, only registered partnership firms are enforceable. A partner can take action against another partner only if it got registered, whereas unregistered firms not not at all allowed. And next one, we had same concept called unlimited liability in partnership type of organizations also. See, for the time being, just remember this point. Every person, a sole proprietor or an entity, or any corporation, any body corporate, every person will have unlimited liability. So partnership firm is also having an unlimited liability concept. And there is one more, a special word, that is joint and several liability. So joint and several liability means I'm not only responsible for my share of losses, I'm also responsible to the my partner share of losses also. He is able to contribute that money, no problem. Suppose two of us started a business. At the end of the day, we suffered a loss of 10 lakhs. Equal partners. I should bear 5 lakhs, he should bear 5 lakhs. No, after seeing the losses, he ran away. He ran away without paying a single rupee. Now I am responsible for entire 10 lakhs. This is known as joint and several liability. That means I am responsible not only for my share of losses, I am also responsible for my partner's share of losses too. You're getting my point. So partnership type of organization, even it had advantages, it also had disadvantages. Now what happens, sir? After knowing these facts, definitely a sole proprietor or definitely a partnership type of organization, partners. So do you think they will start business or they will join employment, sir? Much risk is there? No, sir. No, 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 sir. We won't start any business, sir. We will start a job only. If someone start job instead of starting a business, there is a lot of opportunity cost to the economy. What is the opportunity cost? 10 lakh rupee revenue, unemployment, no, more and people got unemployed. So this is the biggest challenge to the economy, right? Now, yes, government came up with a concept called a company type of organization. So what is the specialty in company type of organization, sir, compared to sole proprietorship, compared to partnership? Here, the only one feature, only one feature, it distinguish, sole proprietorship, partnership from with company. That one feature is separate legal entity. Separate legal entity. What is the specialty of separate legal entity, sir? Owners and company both are not same, both are different. In fact, both are two different persons. Owner one person, company second person. or company first person, owner second person. Both are different. Both are different. So coming to liability aspect, company, what type of liability company will have, sir? Unlimited liability. Company is going to have unlimited liability. That means in the event of liquidation, company is completely liable for all the debts without any limitation. Without any limitation, company is liable for all the debts, unlimited liability. But owner is having only limited liability. Owners in the company is going to have just a limited liability. Hmm. Sir, really biggest advantage, sir. Correct. Excuse me. So this is really a biggest advantage from owner's point of view, sir. But from public point of view, from government point of view, is it an advantage or disadvantage, sir? Definitely advantage. So what is the advantage? Company, it is an association of persons. However, not every association is treated as a company. Only incorporated association. An association which is incorporated under Companies Act, we call it as a company. So incorporation, that means you need to register your entity with the government. When you're registering something with government, definitely government is going to have a control over you. Government is going to monitor you. Not direct control, but they will monitor you. Whenever you do fraudulent activities, they will come forward and they will take action immediately. So transparency is there in the company type of organization. Every government, every person in the government, particularly Ministry of Corporate Affairs, they know how many companies got incorporated and what type of business companies are doing. Everything they will closely monitor. How, sir? Being a company, every year it is required to file 3 to 4 forms with ROC. ROC means Registrar of Companies, one of the authority under central government. So for the time being, ROC means an officer under Ministry of Corporate Affairs who is responsible for issuing certificate of incorporation. That's it. So company point of view, members are going to have a limited liability. Sir, limited liability means what, sir? Limited liability means what? So for whatever amount they agreed, so we are going to contribute this much funds in this company. To that extent only they are responsible. So they started a company, ma. They agreed to contribute capital to the extent of 10 lakhs. They are they agreed to contribute capital 10 lakhs. Till today, they contributed 8 lakhs. Outside debts 10 lakhs, whereas assets 4 lakhs. Profit and loss account debit balance. Assets means a realizable value of assets, current assets or fixed assets, whatever might be. Profit and loss account debit balance 14 lakhs. Now in this case, if you sell all the assets, if you settle the debts, almost how much 4 lakhs will be settled, balance is 6 lakhs. Yes, the debts are still outstanding. Now the owners of the entity, to what extent they are responsible, sir? They agreed to contribute 10 lakhs. Till today they contributed 8 lakhs. So the difference amount, agreed amount minus already contributed, how much? 2 lakhs. So they are liable to the extent of 2 lakhs only. They're not responsible for 6 lakhs. Company is responsible for 6 lakhs, whereas owners will contribute only 2 lakhs. That's it, nothing more than that. Nothing more than that. Suppose if the paid up share capital is complete, 10 lakhs, they contributed entire 10 lakhs. Now their liability would be zero. In this manners, in this manner, owners are going to get protected. One more advantage, company type of organization, the people who are interested in starting a business, they're not bound to do the business. They're not having any obligation to carry business operations. Sir, what it means, sir? Now, under sole proprietorship type of organization, the investor and the person who manage the business is same person. But think about a person, who is having a funds, who is interested in starting a business, but he know nothing about business. Nothing about business, but he is having a plan to start a business. Now, this person simply having funds without knowledge, if he start a business, tell me what would be the result? Definitely loss. Yes or no? So he need to recruit a new, he need to recruit a person, a skilled person to manage the business. Under sole proprietorship type of organization, under partnership type of organization, if the appointed person is negligent, Because of him, today we got huge losses. So who is responsible to the outsiders, sir? Simply, sole proprietor, partners. That's it. But coming to the company type of organization, yes, company is separated, owners are separated, and company being an artificial person, it can't do activities on its own. It definitely requires some human agency support. Yes or no? Yes or no? Company is an artificial person. Can you see the company? Can you touch the company? Can you feel the company? No. So it is just a piece of paper issued by the authority under the Companies Act 2013. Company is nothing but a piece of paper. So if someone asks you, so where is Infosys company? Don't show them, in a map in a Bangalore location. So yes, showing a building. So this is the company. So that is wrong, ma. That is not correct. Someone asks you where is the company, you should answer it is on the piece of paper. That paper is nothing but certificate of incorporation. So certificate of incorporation is the proof that company came into the existence. That's it. So showing a building, just I'm asking you, if I destroy the building, do you think company life comes to an end? If I simply destroy the building, do you think company life comes to an end? No. So company existence is decided by a piece of paper, certificate of incorporation. That's it. Now, yes, being an artificial person, it can't do activities on its own. It definitely require human agency support. Now, these owners, what they are going to do, they are going to recruit a skilled persons. They will name them as the directors of the company. So, company is like a principal, directors are like an agent. Tomorrow, if directors act negligently, as a result, company suffered with huge losses. Now, who is responsible to the outsiders? Company and directors are responsible to the outsiders. Owners are in a safe position. Sir, you are just concentrating on advantages of the company, sir, but you are not telling the disadvantages of the company. Yes, I agree. Company is also having certain disadvantages. So, what is the disadvantage, sir? So, these many benefits, today you are getting, right? Limited liability, separate legal entity. So these benefits you are getting, right? Do you think benefits will be given at free of cost? No. So it is subject to some restrictions. It is subject to some conditions. Sir, example, sir. The company type of organization is not allowed freely to do the business. It is bound to comply Companies Act provisions. So entire act was divided into 29 chapters, further divided into 470 sections. Now each and every company should follow 470 sections while doing the business. So complying provisions is nothing but compliance cost. Cost. So complying all the provisions, yes, you need to invest time. And in all the 470 sections, almost company is required to file n number of forms with ROC. Each form you file with ROC, it's not free of cost. You need to pay fees. And moreover, for getting a certificate of incorporation, for getting company incorporated, definitely you need to pay stamp duty to the government. You need to pay fees to the professional for drafting memorandum of association, simply deeds, agreements. So lot of cost is there, I agree. But the benefits which you are getting under company type of organization is more valuable than the disadvantages. So the benefit you are getting from the company type of organization is higher compared to the disadvantages in the company type of organization. Now, as I already told you, no one will give you benefits at free of cost. It is subject to the restrictions. Yet the restrictions are nothing but need to comply Companies Act 2013. You all getting my point? So, Companies Act. What is the main objective of Companies Act, sir? What is the main objective of company law? First of all, law is nothing but set of rules and regulations in order to protect something, in order to achieve something. So why we are having rules and regulations? In order to protect something, in order to save something. Yes. Example, sir. So today, I mean daily, you people will frame a schedule, a timetable. So these many hours I need to study, these many hours I need to sleep, these many hours I can enjoy, I can have an entertainment. So you are placing a timetable, you are preparing a timetable. Tell me, my dear students, why you are preparing this timetable? Sir, so that we can concentrate studies, sir. So that we can write exams well, we can perform well, we can get a good result. Correct. Correct. What happens if the timetable is not there? What happens if the timetable you are not following? Just tell me. Very simple, sir. We can't write the exams in a proper manner. We can't perform well. We can't score well, sir. Yes, correct answer. Now, another example from public point of view. Just to take traffic rules and regulations, traffic laws. So, green signal, orange signal, red signal. What is the importance of these three signals? Green signal. The moment you see green signal, you can proceed. Orange signal, just go slow. Red signal, stop. Imagine if these rules are not there. Wearing a helmet, wearing a seat belt, these rules are not there. Now, vehicles are going vehicles are going without any restrictions at one place, where, four roads are having a junction. Simply, cross junction is there. So each and every vehicle traveling fastly, what happens, ma? They will meet at one place. We call it as accident. What is the consequence of accident? So people may lose their lives and roads might get damaged. Public properties get damaged. Public life is getting affected. So to avoid this, to protect the public life, to save the public life, we are having a traffic rules and regulations. Now, coming to the company type of organization, owners are having limited liability. Owners are not responsible for the acts of the company. Only company is responsible. Definitely, in history, what happened? Definitely there is a probability. Just listen carefully. Definitely, there is a probability that company may be used for doing some fraudulent activities. I'll tell you in the next lecture. Just listen. They may misuse company in doing some fraudulent activities. Sir, are you sure? In history happened, ma. In history, all the cases, the result is many people misused the company type of organization. So the very second question, lifting of corporate will, I'm going to explain those points there itself. Now, if you are using this company type of organization for good purpose, no problem to me. If you are using it for bad purpose, definitely people will lose trust over the company type of organizations. So to control this, to regulate this type of entity, yes, lawmaker decided to have a law on this aspect. So our company law is simply an administrative law which administers company. That's it. Regulates the company, regulates the directors, regulates the investors. The objective to protect investors from the company malpractices, to protect the public who are dealing with the company from company malpractice. So that's what, lawmaker framed a set of rules and regulations. And one of the cabinet minister, Ministry of Corporate Affairs, so-called minister, yes, proposed the draft bill in the parliament. So luckily both the houses of parliament, Lok Sabha, Rajya Sabha. Lok Sabha is people representatives, Rajya Sabha is state government representatives, state representatives. So yes, both the houses approved the bill, and finally president gave his consent. Now act came into the picture, Companies Act. So from time to time, in order to implement the act, yes, Ministry of Corporate Affairs are framing rules and regulations. And while implementing these rules, any practical impossibilities, if the law is not interpreted in a correct manner, all such cases are forwarded to the judiciary courts. So court is giving judgment from time to time. Now, judgment orders, rules and regulations, act, all these three put together, we will get a law. Law is nothing but set of rules and regulations. Understood, my dear students? Everyone. So that's what, these are just, we had different types of business organizations, which is beneficial, which is not beneficial. So far, we discussed all the points. Now let's see the material without wasting much more time. Just see my preliminary chapter, first one. Scope and applicability, overview to the company. The role of companies is multifarious. That means, it had multiple options, multiple, it can deal in multiple activities, and each of us encounter the work of a company in almost every aspect of our lives. Company is a business form that is arguably one of the most convenient to conduct operations in, and with the continuous amendments, incorporation of companies and doing business through these companies had been made easier. Correct? Incorporation, flexible, flexible incorporation. Amendments are continuous in nature, and you can carry business operations in a convenient manner because owners are not required to work in the company. Whenever company require funds, they are going to come and invest the funds. And who is doing the business? Skilled people named directors. So they are going to manage the funds, they are going to carry business operations. Definitely is the most convenient form of organization. And the Companies Act 2013 refers to a company as an association of persons for economic purpose of carrying on of a business, which could be for the purpose of gain or otherwise. So here otherwise you should interpret as gain only. And do you think that every company is meant for earning profits only, ma? No, ma. So there are few companies with objectives, with a charitable objective. Examples are, Reliance Foundation, Tata Steel Foundation. So these are companies, but their main objective is not to do business. Their main objective is to serve the society. So Reliance Industry Limited, Tata Consultancy Services, Adani Power, and then Asian Paints. All these companies, their main objective is to do business and to earn profits. The Companies Act 2013 defines a company as company incorporated or registered under Companies Act 2013 or any previous law. So this is the definition of the company. I'll explain this point in the first question. Don't worry. In its legal form, a company is an artificial entity where the identity of the members of company is independent from the company itself. That what separate legal entity do. The owners are separated, company is separated. The act of company, owners are not liable. Act of owners, company is not responsible. Next one. Therefore, like any other natural person, a company too has many rights and liabilities that it can incur in its course of operations. The Companies Act 2013 is a comprehensive piece of legislation that covers incorporation, dissolution, and running of the company. So our Companies Act is not just providing a solution how to incorporate a company, it is also giving steps how to liquidate the company, how to manage the business in the company type of organization. Everything is covered. So that's what it's a comprehensive piece of legislation. Everything is covered. Next one, it's not incomplete. It is the first piece of legislation in India that introduced concepts like one person company and has made complaints less cumbersome while incorporating a company. So previously for incorporating a company, lengthy procedure we need to follow, but now for the time being, easy procedure. Just investing 3 to 4 hours time, you can incorporate a company. I'm going to show all the forms in the upcoming classes. The various features of a company are that a company is a separate legal entity. It has a perpetual succession. It may have a common seal. The members of company may limit their liability. It is an artificial person. Now, all these are features of the company, which I am going to explain in the first question. Next, overview to the Companies Act. The Companies Act 2013 has been enacted to consolidate and amend the law relating to companies which used to exist under Companies Act 1950s. So previously, we had a Companies Act 1956. Post independence, in the year 1956, we had a Companies Act 1956. But in the 2013, government of India decided, Parliament decided to repeal, to scrap old act and to bring new act into the picture. So why, sir? Very simple, ma. Just answer my question. Law is nothing but set of rules and regulations to control something in present. Yes or no? Yes, sir. So, do you think present environment, the year 2013, simply 21st century, and the past environment, which is 20th century, 1956 means 20th century only. Do you think environment is same? Environment in 20th century, environment in 21st century, is it same? See, environment means not climate environment. I'm talking about business environment. One small example I can tell you. Previously, everything, every purchase, every sale, we made it through cash only, cash form of business. Today, even 10 rupees, making payment of 10 rupees, we are using Google Pay, Phone Pay, Paytm. That means online transactions. So previously, in order to steal money, in order to loot money, yes, a person will go to the house of the rich person and he will loot the properties. But now, simply sitting in a room, hacking a one computer, hacking the bank account. Yes, I'm going to steal. I'm going to rob everything. These are negative examples, I agree, but tell me, environment in 20th century, environment in 21st century, are they looks like same? No. Now coming to the business environment, I mean coming to the positive environment point of view, previously we had no this much business concepts like today. You can sell items online. So I can purchase any item which a seller is selling in Madhya Pradesh, seller is selling in Kashmir. I can purchase them easily. So business environment is not static in nature. It is dynamic. Day to day updates, new updates is coming. But how far it is feasible to follow a Companies Act 1956? You all getting my point? No, it is based on their past experience. Every law, for the time being, it is written based on the past experiences only. So based on past experiences, to control something at present, we are framing the rules and regulations. 1956 environment is, it's very, very, very tough to follow that act in the year 2013. So many of the provisions lost their essence. So instead of amending each and every provision, let's do one thing. Repeal the old act, then simply scrap the old act, bring new act into the picture. Here, so that's what in a law subject you'll find frequent amendments. So laws are of two types. One is administrative law. As of now, we discussed which regulates something like partnership for act regulates partnership. Companies Act regulate company. Sale of Goods Act regulates sale. It regulates rights and obligations of the parties to the sale. Indian Contract Act regulate contracts. Am I correct or not? The other kind of law is revenue laws. So here, the main objective of government is to earn revenue, like Income Tax Act, GST Act. They also form part of law only. No, don't think that they are separate subjects. No, they are also laws only. So whatever you heard about, act at the end of the subject, at the end of the one name, if you find act, it is nothing but law only. So Income Tax Act, it is also one law. But government objective is to earn more income. So through income tax and GST, our central government or government of India is earning nearly 30 lakh crores, sorry, 22 lakh crores if I'm not wrong. So from direct taxes, they're getting, from corporate taxes and income taxes, they're getting almost, 12 lakh crores. And from GST, they're getting some 6 lakh crores, 6 to 12 lakh crores. Hmm. So customs on petroleum, they're getting excise duty, everything put together, almost some 20 to 24 lakh crores is the revenue to the government today. So based on their revenue, they're making budgets every year. February 1st, they were going to announce a budget. So members of parliament are giving approval. Once they give approval, it is sent to the president for the consent. Once president give consent, it becomes Finance Act. Finance Act 2022. Finance Act 2023. You're getting my point, students. Next one. So why we find frequent amendments, frequent updates in the law is the simple logic. The simple logic is environment is not static in nature. It's not constant. It's dynamic in nature. This has helped in the expansion and growth of the economy of our country by making it easier to set up the companies. The Companies Act 2013 received the assent of the Honorable President of India on 29th August 2013 and was notified in official gazette on 30th August 2013. Later, it implemented in a phased manner. Phased manner means what, sir? The total Companies Act is of 470 sections. All 470 sections didn't came into the force at once. Section 1 was notified on 30th August 2013. Some 98 sections were notified on 12th September 2013, and some 184 sections were notified on 1st April 2014. So like this, all 470 sections at one time, 98 sections at another time, 184 sections at another time, some 100 sections, like that they were notified. They came into the force on different dates. That's why we call it as implementation didn't happen overnight. Implementation happened in a phased manner. The entire act has been divided into 29 chapters. Each chapter has at least one set of rules. The Companies Act 2013 aims to improve corporate governance, simplify regulations, and strengthens minority investor interest. So corporate governance. Here you can observe transparency. So transparency means what? Company every year it is filing forms with ROC. Once you file a piece of document with ROC, it becomes a public document. Any interested person from the public can download them, can read them, can come to a conclusion whether company is a good. I mean, company is good at the business operations or not. Everyone will come to know. And moreover, board of directors are made responsible to the company as well as owners of the company. So therefore, you can ask them, what is the position of the company, how long company can do the business. Everything you'll get to know instantly from the directors. So board of directors are responsible to the company. Board of directors are responsible to the company owners. So all internal management is subject to the review or verification. So whether internal management is acting according to the rules and regulations or not, everything is there. So transparency you can find in the company type of organization. So leading to the governance, corporate governance. Next one, simplified regulations. Yes, Companies Act had very regulations which are very not simple in nature. It's a tough, I know, tough to follow, but still compared to the other type of organizations, we had simplified regulations. And everyone get protected. Everyone is going to get protected due to Companies Act 2013. Imagine if this act is not there, everyone will form a company, everyone will do a unlawful activity, everyone will tell that act of company we are not responsible, so please punish company. Everyone will try to escape from the situation. Are you all getting my point, students? So with this introduction part completed, ma, just 1 second. I'm going to start question number 1. Write a short note on definition of a company and characteristics of a company. So definition. Sir, is it necessary to define what a company is? Yes. Why? Our Companies Act 2013 is applicable to company. So company means what? In a dictionary, you'll find another meaning. You'll find one meaning. So company. So few people coming together doing something. Company. Now, if you feel bored, you will call your friends. You'll ask them a company. Company means, do you think, sorry, is it a company? Yes. From friends' point of view, from your point of view, it is a company. But to such a company, our Companies Act applicable or not applicable? Not applicable, sir. Companies Act is applicable to the body corporates. No, an incorporated association, right? So if we don't define a single word, and if that word is giving a two or three interpretations, then understanding the law, application of the law become complicated. So that's the reason we are having a definitions. So the important words which require definition will be defined at one place, that is popularly section number 2. Majority of the 90% of the acts will have a definitions at section 2 itself only. Now definition of a company, meaning is different, definition is different. If you look into the meaning, company is an association of persons. Association. In this association, each and every person will have a common objective, business goal. So they want to do a single business, say for suppose manufacture of paper plates. Now all the persons having that objective, they will form an association. So they will start a fund. They will frame a fund. So to this fund, everyone will contribute money, or money is worth some assets, plant and machinery, furniture and fittings, like that. Now with all these resources, people are going to, that association is going to start a business at the end of the period. Say for suppose at the end of the year, they will prepare financial statements. They will come to know the position of the company, financial position of the company. They will come to know the net result of the company business operations, whether profit oriented or sorry, whether we are getting profits or losses. So that association. In popular parlance, a company denotes an association of persons formed for the purpose of carrying on some business or some undertaking. A company is a corporate body and a legal person having status and personality distinct and separate from the members constituting it. So, owners and company both are not one and the same, they are separated, they are two distinct persons. So, meaning excellent, but definition is important. Why? Because if you look into the word partnership, if you look into the business of partnership firm, tell me, you look into the partnership firm, it is also an association. They are also having a common objective of doing business. They are also having an objective to earn a profit. Whatever profit they are getting, so they will distribute among themselves. Yes or no? But do you tell that, or do you apply our Companies Act to such associations? No, not at all. Then, sir, what type of associations, or what are the associations which are bound by the provisions of Companies Act? that association I'm going to define under the definition point. Now see the definition. Company means company incorporated under this act or under any previous company law. Company incorporated under this act or under any previous company law. Very simple definition, right? So here we are having a meaning to the word defining. I mean, here the definition is defining the word. Company means company incorporated under this act or under any previous company law. Simply, under this act is nothing but new company. Under old acts is nothing but old companies. So our Companies Act is going to apply not only to the new companies but also to the old companies. Understood? Yes, sir. Understood. Good. So what is the main objective of defining definition in this manner? I'll tell you the logic. We had many companies prior to Companies Act 2013. So this act is not a new act. It was a reenacted act. So this was reintroduced to control the companies, correct? Do you think that there is no company prior to Companies Act 2013? The answer is no. Companies are there. Infosys incorporated in the year 1981 under 1956 Act. Wipro incorporated in the 1945-46 financial year, which is incorporated under Companies Act 1913. ITC incorporated under Companies Act 1882. So we had previous company laws. We had four previous company laws. First, 1866. Next, 1882. Companies Act 1882. Next, Companies Act 1913. Next, Companies Act 1956. So, what about the companies incorporated under previous laws? Is our act applicable to them or not? Yes, they had a dilemma. So we came first, later act came into the picture. Act will never have a retrospective effect. Act will always have a prospective effect. That means when act got notified, from that date only, from that date onwards, act will be applied, act will be implemented. Are you getting my point? Now, Infosys, Wipro, ITC, Asian Paints, which were incorporated prior to 2013, whether 2013 Act is applicable or not is the biggest question mark. So now the lawmaker is telling that yes, you are also required to follow our Companies Act. You are also a company under new Companies Act. How, sir? A company which is incorporated under previous company law, it is also a company. Accordingly, you need to follow Companies Act 2013. See, we are not giving you retrospective effect. So this act was notified in the year 2013, right? The activities, the obligations which you are having or which you need to perform from 2013 onwards, the obligation that arise after enactment of this act, after notifying this act, only to those things our act is applicable. For the past activities, previous laws will apply. For the past activities, previous laws will apply. So for current activities, current act is applicable. So simply to remove the dilemma whether old companies bound to follow the new provisions or not, the definition was framed like that. So here company means not only the company incorporated under present act, but also the company incorporated under previous laws. Now previous company law under section 2 clause 67 means any previous company law specified in that section. In that section, four previous laws were specified: 1913, 1956, 1866, and then 1882. Next one, characteristics of a company. So these are the features. So today, the association will have following features. See, by the definition, it is very clear, not every association is a company, but an incorporated association is the company. Is it clear? So through incorporation, you are going to get following features. First one, a separate legal entity. Company is a separate legal person and an artificial person. It is distinguished from the shareholders of the company. It has its own independent corporate existence. This is an advantage too. So how it is an advantage, sir? If you look into the partnership type of organization, if there is any conflict between the partners, suddenly, one of the partner, he decided to withdraw from the association. So he will withdraw whenever he get out, he will take the resources of the partnership firm. Whatever money he invested in the organization, whatever assets he contributed in the organization, he will try to take all those resources and he will leave the place. Now with the remaining resources, is it possible to continue the business? So we need 100 resources. That person take over some 20. We had 80. Can we complete the business? No. And we need to look for a person who is ready to contribute the same resources. Until then, partnership type of organization can't do the business. But coming to the company type of organization, each and every owner will be given shares. The ownership document. Tomorrow, if you are not interested to do business, or to sorry, tomorrow if you are not interested to continue in this association, you simply sell your shares, transfer your shares, and then leave the premises. Now, company assets won't get affected because of a person withdrawing from the association. Company is having a continued existence, had own independent existence. So through this, company will get a contractual capacity. Company can enter into contract with the debtors. Company can enter into contract with creditors. Company is responsible to creditors. Company is having rights over the debtors. Complete everything, separated. Now the existence of a members is not will not affect the existence of the body corporate, existence of the company. So next one, a limited liability. So many people will think that company's liability is limited. It is a wrong answer. The wrong answer. The characteristic liability limited is given to the members of the company, but not to the company. So company is always having unlimited liability. Company always have unlimited liability. Only the members will have a limited liability. Just now I told you they agreed to contribute 10 lakhs. So far they contributed 8 lakhs. How much pending? Balance amount. How much is outstanding? 2 lakhs. So they're liable to contribute 2 lakhs only. They're liable to contribute 2 lakhs only. So the liability of the members of a company having share capital is limited to the extent of nominal value of the shares held by them. The shareholders can't be called upon to pay more than the unpaid value of his shares, whatever may be indebtedness of the company. Unpaid value is nothing but simply how much they agreed to contribute, agreed amount minus already paid amount. Agreed minus paid, you'll get unpaid amount. So whatever may be the indebtedness of the company, so it is irrelevant. So how much amount company is liable to the outsiders, it is irrelevant. Members are liable to contribute that amount only which they agreed to contribute. Next, perpetual succession. It is nothing but continued existence. Perpetual succession, continued existence. Company has its existence from the time of incorporation to the winding up. Both birth as well as death of the company is decided by law. Decided by law. So yes, today authority giving certificate of incorporation, that means company came into the existence. Today suppose authority cancelled that license, cancelled that certificate of incorporation, company got liquidated. That's it. So that's it. No other option. So both birth as well as death decided by law. So members may come, members may go, but the company survives up to the winding up. In a partnership type of organization, if suddenly one partner withdraw from the association or a new person joining the association, so the old association gets dissolved, new association will come into the picture. Every time you need to amend the deed, every time you need to change the deed, every time you need to make changes. In company type of organization, you can't find those changes. Separate property. So company is having right to acquire and transfer properties in its own name. Just look into one example, ma. Two persons are there. Sorry, three persons, A, B, C. So they want to start a business. A agreed to contribute money. No, he agreed to contribute capital. B is having plant and machinery. Yes, he provided plant and machinery. And C is a supplier of materials, supplier of raw materials. So C is supplying raw materials to the business. C is already having a raw material business, selling raw materials. So C is also interested to start the business with A and B. So the arrangement is like this: C will contribute raw materials to the business, B will contribute plant and machinery, and using this money, paying for the labor, paying for the power bills, paying rents, etc., etc. This money will be sufficient. Paying rents, everything. So now three people. So C agreed to contribute raw materials that is necessary for production. B agreed to contribute plant and machinery which will carry production activities, and A will invest money to carry out the operations. So the business is doing well. Yes, they're getting good profits, but suddenly, she got a thought, without my raw material, these people are simply waste. They don't continue the business. My raw material is crucial. From B point of view, my plant and machinery is crucial. You, even if you supply raw materials, if I stop production activity, tell me what you two people will do except begging. Next, A is thinking, are your raw material, your plant and machinery are simply waste without my working capital. My money is also important. So simply ego clash, ma. Now tell me, with these ego problems, can they continue to do business, ma? No. So each and every person started withdrawing their names from the association. As a result, the business will be closed. No revenue to the government, no employment opportunities to the society. But same concept if I apply in the company. Suppose there is a company ABC Private Limited. Now all these ABC shareholders, they will contribute directly to the company. Company will be the owner of the assets contributed by the members. Assets. So company is owner of the assets, whereas ABC, they are owners to the company. This doesn't mean they are owners to the company assets. No, 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 no. ABC, they're owners of the company. They're not owners to the assets. Because we had a separate legal entity concept, right? Separate legal entity. Now, in this case, because of this feature, company can acquire property in its own name. Tomorrow, even if there is any problem between A, B, C, they will sell their shares and they will leave the association. So these people are owners of the company. For that, company will issue some shares, property, ownership document. Tomorrow, if any problem, if any problem between members A, B, C, one who is having a problem can sell the shares or can purchase the shares of other person and can continue the business operations. So the existence of the members, the withdrawal of the members is not going to affect the business operations of the company. Next one, separate, common seal. Now we natural persons, we can sign the document. I am signing the document. But do you think company, being an artificial person, can it sign the document, ma? No. So company is having an official signature. It is uh, indicated through common seal. So common seal is nothing but official signature of the company. So simply fixing it on the documents such as contract documents, yes, company is that agreement is said to be signed by the company. Since it is an artificial person and cannot sign on its own in the documents. But this is not compulsory today, ma. This is optional. This was made optional under Companies Amendment Act 2015. Simply, two directors representing company. In case company is having secretary, one director plus one company secretary signing the document is sufficient. The company is bound by that agreement. The company is responsible to such agreements. So previously, along with these two people signatures, we need to fix common seal. But now common seal is not compulsory. So the directors of the company signing it is sufficient. Okay. Next one, transferability of shares. Any person having issue in the company or any person required funds, so simply they can transfer shares. So shares are freely transferable, but we had an exception, that is a private company. What is a private company? I'm going to explain you in the next part. In the next lecture, I'll explain you what is a private company, what is a public company. Next one, capacity to sue and be sued. Being a separate legal entity, the company is having capacity to sue the others and it can be sued by the others. Yeah, debtor is not paying amount. Creditor, sorry, company can directly file case on the debtor. If creditor is not getting money from the company, creditor can directly file case on the companies. With this, owners are not at risk. Owners are not responsible for the company actions. Owners protected and company is solely responsible to the outsiders. Next one, define piercing the corporate will, explain its necessity. Corporate will is nothing but it's like a curtain, mask, mask. Not Elon Musk telling about a mask, face mask. By putting face mask, tell me, is your identity revealed or concealed? Or concealed, simply hiding our identity. Today, owners started a company. So company, this company is entering into agreements with the debtors, simply customers. Debtors is nothing but customers. Next one, company is entering into agreement with suppliers. All these transactions are on credit basis. Then supplier is a creditor, customer is a debtor. So simply to the outsiders, tell me, owners revealed or only company got revealed? Only company got revealed. Suppose I'm dealing with Reliance Industry Limited. Can you tell me the owners of the company? You will answer, sir, Mukesh Dhirubhai Ambani. You know Mukesh Dhirubhai Ambani as a director of the company, not as a shareholder. He's the owner of the company, right? But do you think he is the sole owner of the company? So today that company is having more than 5 lakh members. Do you know all 5 lakh members? That company is having almost 15 directors. Do you know all the directors? Being a managing director, Mukesh Dhirubhai Ambani sir is revealing to everyone. I'm talking about all the owners of the company. ITC, it is having more than a million shareholders. So do you know all million shareholders? No. You know only ITC. You know only ITC. So company, separate legal entity. So you know it. But this is not a building. Company is not a building, or company is not something, it's a tangible, it's not a tangible thing. It's an intangible thing. You can see only on the certificate of incorporation. But this certificate of incorporation is hiding the members' details. So members are not known to the public. Only company is known to the public. So any person dealing with company can, he don't know about the insiders. He don't know about the owners of the company. Because of this privilege, owners are not affected by the acts of the company. Correct? And this is the biggest advantage. The advantage is company will have unlimited liability. Owners will have only limited liability. Am I correct or not? Yes, sir. Owners will have a limited liability. Company unlimited liability. And in company type of organization, dual role is possible. Dual role means a single person can act as a owner of the company by having shares. The same person can be employee of the company if he got appointed as a director. You see, Mukesh Dhirubhai Ambani sir is holding almost 48% share capital in Reliance Industry Limited. By virtue of his holding, he is the owner of the company. And he was also appointed as a managing director, chairman come managing director of the company. That means a single person doing two roles. The member, he is having one role. As a director, he is having another role. Dual role is possible. Dual role is permissible. Correct. So now owners having limited liability. This is the biggest advantage. This advantage will be given as long as you continue business. You continue company type of organization only for lawful activities. Your objective is to do lawful activities, then we are going to provide this privilege. So what if I incorporate a company for a fraudulent purpose? Example. No, I'm having a enemy. Yes, in my real life, I had one enemy. I don't want to reveal his details. So once if I see him, I want to kill him. I need to kill him. That much, no, my mind won't accept, looking at that person. So he tried to damage my reputation. Story only, don't think real. So he tried to damage my reputation. On listening to all the facts, I got very, very, anger. I became anger. So I want to kill that person. But killing a person is a crime. You'll be sent to jail. Yes or no? Correct. So now what I should do? What I should do like this, I'm thinking. Suddenly, I came across this concept, company type of organization. So separate legal entity, perpetual succession, limited liability. And the advantage of separate legal entity concept is, act of company, only company is liable, members are not liable. Okay, fine. Now you know what I did? I incorporated a company by managing, ROC, paying above the table, below the table. Somewhat, I managed ROC and I got certificate of incorporation. My main objective is to kill a person. My main objective is my company main objective to kill a person as and when required for a valid consideration. So company got incorporated. I'm the director of the company. I'm the owner of the company. And suddenly, one day I went to the building, I simply knocked the door as a customer. I went inside and I'm telling that, sir, I want to kill a person, sir. Example, Mr. Sham, I want to kill a person, as a customer. Now, again, changing my position, coming to the director position. Acha, sir. Okay, fine. The consideration is 5 lakh rupee plus GST, sir. Since we already exceeded the turnover limits, we are subject to GST, sir. 5 lakh rupee plus GST, sir. Okay, fine, sir. Take this check, sir. 6 lakh rupee check I'm giving to you. Please finish the work. Acha, fine, sir. Now, a director of the company, what he did, he appointed some four goondas, four rowdies. These four rowdies rounded off, this Sham person, and these four persons killed Sham. Murder completed. The very next day, police came to me. Sir, you are under arrest. Why? You killed a person. No, 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 no. It's not me. Just go through the documents. On the documents, company agreed to kill a person. Company agreed to kill a person. So it's a company mistake. You need to punish the company. Act of company, directors, members are not responsible. You punish the company. Take the certificate of incorporation. Apply third degree, fourth degree. If you want, hang the company. Tell me, my dear students, if this is permitted, and if police, if they are in dilemma, just tell me. Everyone will do unlawful activity, illegal activity under company type of organization. Thereby, public interest gets affected. Public policies, simply protecting public will get wasted. You might have something, on your politicians. You want to kill your politicians. Example, I'm telling you. So this is just, for understanding sake, I'm telling you. Or you don't want your some fellows which who irritates you, or you want to rob bank, bank full of funds, some 10 crores will be there. So today night we are going to rob in the name of company type of organization, under the style of company type of organization. So we are going to rob bank. Tomorrow if police come, we will surrender certificate of incorporation. Possible or not possible? Yes, possible. So that's why, the lawmaker decided. So whatever advantage we are giving, separate legal entity concept, the same concept we will lift, we will remove it. That mask we are going to remove it. If you are using this concept for fraudulent purposes. If you are doing any fraudulent activities in the name of company type of organization, we will simply remove the mask. We will identify the real persons behind the mask, and those real persons are going to get punished. So we had some famous case studies under B point. I'm going to explain all those points now only. So the separate personality of a company is a statutory privilege, and it must be used for legitimate business purposes only, lawful business activities. Where a fraudulent and dishonest use is made of the legal entity, the individuals concerned will not be allowed to take shelter behind the corporate personality. The court will break through the corporate shell and apply the principle doctrine of what is called as lifting or piercing of the corporate veil. Simply, they will remove the mask. They will remove the, in COVID situation, in COVID pandemic situation, you wear mask, yes or no? So if you wear mask, can you be traced? Can anyone trace you? So you are so and so person. Is it possible? Until you remove the mask, will not be traced. You're not traceable. So here also we are going to lift the wheel, piercing the corporate wheel. That means, making that wheel void. The court will look behind the corporate entity and take action as though no entity separates from the members existed, and make the members or the controlling persons liable for the debts and obligation of the company. So now what court will tell, sir, so in my case, no, in a murder case, what court will tell, sir, you incorporated company for a fraudulent use, sir, to kill a person. We are lifting the will. Once the will is lifted, we are seeing you only, sir. Only you will be identified. And you made the mistake. Come on, punishment to you only. So please go to the jail for next 2 years, sir. Don't come out, sir. So after coming out, also don't repeat such kind of mistakes. If you repeat such kind of mistakes, you'll be hanged. Understood? So in the following circumstances, different courts found it necessary to lift the corporate will and punish the actual persons who did wrong or who did unlawful activities under the name of the company. The first one is protection of revenue. The court may ignore separate legal entity status of a company where it is used for tax evasion or circumventing tax obligation. So here, we had a famous case study, the Dinsha Menekji Petit versus CIT. So Dinsha Menekji Petit. In that case study, what actually happened is previously, today individuals are liable to pay tax at 5%, 20%, 30%, max 30%. Companies, depending upon the nature, domestic companies, and then mm, turnover up to 400 crores. So based on some criteria, companies will be taxed between 22% to 30%. Criteria is important here. So few companies will be taxed at 18.5%, also 18%, 15% plus surcharge plus cess. That concept is also there. I think it would be 17%, around 17 or 18%. But for the time being, for your knowledge sake, I'm giving these rates. Partnership firms are taxed at 30% straight away, no discount, no concession. So individuals will get a less tax, whereas corporates will get a more tax. But previously, after independence, the tax rates are entirely different. Individuals are subjected to tax of some 90%. Yes, this is a known fact. Not telling something which is wrong. I'll show you. Just wait. Highest rate of individual tax. Highest. So this is today. Today the tax rates are like this. If you look this first paragraph, the post-independence era, we began with a British overhang and continue to levy very high rate of tax, such that in 1970s the maximum tax, including surcharge, was 97.75%. That means if you are earning an income of 1 lakh rupee, you need to pay 97,750 rupees in the form of tax. That balance 2,250 is your income. Come on, enjoy. So they got reduced like this, 97.75 to 42.7. So as of now, the maximum tax is 42.74. Depends upon your income. If you're earning 100 crores, 200 crores, 300 crores income, then you need to pay tax of 42.74%. The main objective of taxation is simply, to take money from the rich people and to spend that money on the poor people. So rich will pay tax, poor will get money under various schemes. You all know about scheme money. You're from Tamil Nadu. So Tamil Nadu is the state where more schemes are there. They spend huge money on the schemes. Next, every state government will pay money under schemes. Their vote bank is important. Next elections, they need to win. They need to continue the government. Of course, fine. Okay, that's not our subject. Now, companies are taxed at 10% at that point of time. One point of time, individuals were taxed at 90%, companies were taxed at 10%. Dinsha Manekji Petet, that person is getting some 20 lakh rupees in the form of interest on FDs. Interest on fixed deposits, that person is getting a 20 lakhs income. If that person is getting 20 lakhs income, apply 90% taxation provision, 18 lakhs that person is bound to pay in the form of tax. Now that person, decided avoid the tax. Why I need to pay 18 lakhs? I need to avoid the tax. The objective is evasion, tax evasion. So through illegal practices, he or she want to avoid the tax. That's what that person incorporated a company. So in this company, the capital is 2 crores. For investing 2 crores in the company, what that candidate did, So that candidate is having a fixed deposit in a bank. The fixed deposit value is 2 crores. So that person, instead of paying money to the company, that person transferred fixed deposit to the company account. Company account, fixed deposit 2 crores, capital invested by Dinsha Managji Pate 2 crores, 2 crores, 2 crores tally. Now, if you look into the profit and loss account of the company, yes, company is getting a income, interest income. How much? 20 lakhs. Tax, how much? Just 2 lakhs, 10%, no? Now, how much is the net profit? 18 lakhs. In this manner, tax was avoided. 16 lakhs, to the extent of 16 lakhs, tax was avoided. Okay, sir, but that money is in the hands of company, no? How Dinsha will enjoy? Listen to the point carefully. The net profit will be transferred to balance sheet, yes or no? Under reserves and surplus, how much ma? 18 lakhs. Cash in bank, cash balance, 18 lakhs. Correct? Now this Dinsha started play. How he or she started play, sir? That candidate took loan from the company. Company, I need money. I invested money in you, right? Now I need money. Come on, give me loan. Loan is not an income, right? Tax will be levied on the incomes. Tax will not be levied on the loans. Because if you go to bank, if you borrow 10 lakh rupee, do you is there any obligation on you to pay tax on 10 lakh rupee loan? No. So this fellow requested company, please grant me loan. And company gave the loan. Now cash balance became zero. Loans to director 18 lakhs. Now also balance sheet got tallied. There is no change in balance sheet value. 2.18 crore, 2.18 crore. There is no change in balance sheet value. Balance sheet tallied. If you observe, using company type of organization, that candidate is taking money by paying less taxes, paid less tax and using that money. The loans definitely that candidate should repay. No, yes, that candidate will repay. That candidate will repay. That candidate till today, that candidate will tell, I'll repay, sir. Don't worry, I'll repay. My company only, I'll repay money to the company. I'm not going to escape that amount, sir. So same next year also, same 20 lakhs income came, cash balance 18 lakhs, reserves and surplus 36 lakhs. That cash balance 18 lakhs, once again the candidate withdrawn under loans to directors concept. So candidate is getting money using that money, but that candidate is getting money under loan, and that candidate had no intention to repay to the company. Now tell me, my dear students, in this case, the real intention of incorporating company is to do the business or to manipulate government by paying less taxes. Sir, obviously, manipulate the government by paying less taxes. That's what tax evasion means. So one day, Commissioner of Income Tax observed the situation and issued notice to the Dinsha. Dinsha, you are liable to pay 16 lakhs tax additional. So you incorporated a company to simply to cheat the government. So that candidate disagreed, ma. So matter is in conflict. Both went to the court. Court observed what is the real intention of the incorporating a company, for carrying lawful activities or for carrying unlawful activities. Here, carrying unlawful activities the motto. Evasion of tax is the motto. No, you are subject to the Constitution of India. According to the Constitution of India, when Parliament, whatever it approves, the bill, whatever it passes a bill, act, every Indian is bound to follow that act. Every Indian is required to follow that act. Our Income Tax Act is the result of Parliament approval and President approval. It is as per Constitution of India only. You are bound to follow such acts. Every Indian citizen is having fundamental rights and fundamental duties. Fundamental duty, follow constitutional provisions. Accordingly, follow Income Tax Act. You need to pay tax 18 lakhs, but you are paying tax only 2 lakhs. Pay the balance amount. So, quote, simply removed the corporate will, identified the Dinsha, and quote, clubbed the income of company in the hands of income of Dinsha. Accordingly, Dinsha is liable to pay more tax. So, what is the result in this case, sir? Simply they lifted the mask in order to identify the real person who is controlling the company. So, for protection of revenue, in the history, court ignored separate legal entity status. First one. Second one, determination of enemy character of the company. Company being an artificial person cannot be enemy or a friend. But during war, it may become necessary to lift the corporate will and see the persons behind it to determine whether they are friends or enemy. This is due to the reason that though a company enjoys separate legal entity, but its affairs are run by the individuals. The case study is Daimler Company Limited versus Continental Tires and Rubber Company Limited. So D Limited versus C Limited. For the time being, D Limited versus C Limited. Sima, company has its own existence. The nationality of the company depends upon the nation where it got incorporated, but not through its members. Suppose today I incorporated company in Hyderabad. All the members of Hyderabad company, they belongs to South Korea, they belongs to China, they belong to USA. So none of the person is from India. No foreigners came to India, foreigners came to Hyderabad, foreigners incorporated a company in the Hyderabad. Now, since our company had only white people, can you call that company as a white company? Can you call that company as a foreign company? No, it's not a foreign company. It's an Indian company only. Nationality of company depends upon the country where it got incorporated, but not the status of the members. The question here refers to sometimes we need to consider the nationality of members also. That means, we need to remove the will. We need to identify the real person. I'll tell you. During wartime, during wartime, just answer my question. During war period, trading with allied enemy, is it correct or incorrect? Trading with the allied enemy, is it correct or incorrect? Not permitted. Why? Why, sir? The answer is, if I permit this person to trade with allied enemy, if he is purchasing the things, money from one economy is getting diverted to another country economy. Now the country which is selling the things, our enemy country selling the things to India, and Indians paying money to that country, the country getting money. After getting money, they will invest in the defense. Suppose there is a problem with China ma. We know we purchase all majority of our purchases belong to China only. Majority of the things we purchase made in China, yes or no? So now money will float from Indian economy to China economy. Whatever money China is getting, they will invest in the defense. From defense point of view, they become strong than us. Definitely, we will be in a losing position only. In order to avoid this, trading with allied enemy is prohibited. So we had two companies. One company got incorporated in the Britain, but shareholders belong to Germany. Dalmar Company, sorry, Daimler Company Limited versus Continental Tire and Rubber Company Limited. In this, what happened? In this case, what happened, sir? So Germans came to Britain, ma. Germans came to Britain, UK. They incorporated a company in UK. So German-based company got incorporated in UK. So Germans used to send tires, rubber tires to UK company, and this UK company started selling to the uh, residents of the UK. Just listen carefully. So D versus C, D Limited versus C Limited. So in a country called Germany, we had a manufacturing company which is which is sending its products to a company which is incorporated in UK. And UK based company, it is selling the goods to the customers. So all the customers, whoever purchase goods from this company, they are sending money to the company, they are paying money to the company, and this company is sending that money to the company which was incorporated in Germany. So Germany company selling the goods to UK company, UK company selling goods to the customers. So money transaction, customers to UK company to the German company. One day, what happened? There is a war between UK and Germany. First World War, imagine. Both become aligned enemies. Both become enemies. So now this company is forcing UK company to pay the money. UK company is asking customers, come on, pay us money, come on, pay us money. So these customers, they told that, no, 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 we won't pay you. During war period, trading with aligned enemies void. Array, I was incorporated in the Britain. I was incorporated in the Britain. I belongs to you only. So my nationality is UK company only, Britain company only. So it's not trading with alien enemy. Come on, pay to the money. Sorry, pay us money, pay us money. Like that, it started forcing customers. But customers telling trading with alien enemy is void. So as of now, we won't pay the money. So yes, matter is in conflict. So the matter went to the court. Court simply observed one point. If customers pay money to the Britain company, immediately Britain company will transfer money to the Germany. Thereby Germany economy will be boosted, UK economy will come down, money point of view. So money resources point of view, UK will become inferior to the Germany. You getting my point? Actually, nationality of the company depends upon the nation where it got incorporated. Sir, no. Now the question is, UK based company, UK based company, sometimes we need to remove the will in order to find out the real character of the company. Is it a friend company, or an enemy company, enemy country company? For getting that point, just court removed the will, and they identified the real persons who are controlling this company. The real persons, they are Germans. So paying money to UK company, the Almer company, is nothing but paying money to Continental Rubber Tires Limited only. In that manner, a will was ignored to find out the real character of the company. Next one, prevention of fraud. Where a company is used for committing frauds or improper conduct, the court may lift the corporate will and to look at the realities of the situation. Jones versus Lipman. So in Jones versus Lipman, what happened? Lipman, a landlord, is having 10 acres land. 10 acres land. He decided to sell all these 10 acres land to Jones Ma. And Jones paid him some advance. So total consideration, for example, total consideration 10 lakhs. Jones paid advance of 50,000. You take this 50,000. Within 30 days, I will pay balance 9.5 lakh and I'll take the possession of the property. I'll take possession of the property. That is the agreement between Jones and Lipman. So 20 days completed, ma. Suddenly Lipman came to know. So there is, government is planning one industry near to this 10 acres. As a result, the value of 10 acres will go to 1 crore. Now, Lipman is thinking, oh my god, unnecessarily I took advance from Jones. So the value of land is 1 crore. I agreed to sell it at just 10 lakhs only. No, no, no. This transaction should be avoided. But how? Tomorrow, if Lipman didn't register that land in the name of Jones, it leads to breach of contract. So Jones is having a power. He is having a right to demand for specific performance. Jones may demand for specific performance. Definitely, Lipman has to surrender the possession of the property. So Lipman, what to do, what to do. He decided to incorporate a company, say for suppose L Limited. And he decided L Limited capital would be 10 lakhs, capital 10 lakhs. For contributing to the capital, Lipman transferred the land to the L Limited, land 10 lakhs. So L Limited, separate legal entity, L Limited company, the separate legal person. Activities of the members won't affect the company. Activities of the company won't affect the members. So after completion of the 30 days time period, Jones came to pay balance 9.5 lakh and asking Lipman, come on, give me the land. Lipman is telling that, sorry sir, I already transferred land to L Limited, sir. Jones told, hey, L Limited is your company only, right? Correct, sir, my company only. Ask L Limited to transfer land to me. No, sir, I'm sorry, sir. No, I'm going to take action on L Limited. Sir, it's not possible, sir. You entered into a contract with me. L Limited is a separate person. It is a stranger to the contract. How can you enforce contract on a stranger, sir? It's not a party to the contract. Yes or no? How can you file an action? How can you claim an action on L Limited? L Limited is not a party who promised to deliver or who promised to surrender possession of the land to you. It's me entered into the contract, but today because of non-availability of land, already I delivered possession to L Limited. Today I'm not having anything. I can't transfer land to you, sir. Subsequent impossibility, sir. Supervening impossibility. So this is a void contract. Treat it as a void contract. You please leave the place, sir. You please leave the place, sir. Impossibility, sir. Jones left the place, but Jones went to the court. Jones, proved in the court of law that, L Limited was simply a sham, a bogus company. Simply to cover Lipman fraud, L Limited was incorporated. So, court, what it did, simply it lifted the corporate will. What is the intention of incorporating the company? Doing the business or cheating Jones? Cheating Jones. Now, accordingly, the wheel was lifted. Now, this land came back into the hands of Lipman. Accordingly, Lipman, having the land, should deliver. Deliver means, he should give property documents to the Jones. and Jones got the property. The property got registered in the name of Jones. Your intention is fraud, or his company made some bogus. In those cases, the wheel will be lifted, the real persons behind the wheel will be punished. Protection of public policy. The court shall lift the corporate will without any hesitation to protect the public policy and prevent a transaction opposed to the public policy. Just now I told one example, killing a person, robbery. For doing these things, if I want to incorporate a company, if I incorporate a company, court will ignore the will, court will find out me, court will punish me. Next one, company meerschaum or clock, where a company is a meerschaum and was really employed used for committing illegal activities, illegalities, and to defraud people, the court shall lift the corporate will. Example: Guilford Motor Company versus Hearn. Actually, Hearn is an employee in a company called Guilford Motor Company. Acha, tell me, my dear students, if you want to purchase Activa scooty, you will definitely go to a showroom. Yes or no? Will you directly talk with showroom owner, or will you talk with sales executives? Will you talk to sales executives, or will you directly talk to showroom owner? Sir, obviously sales executives, sir. Showroom owner, he will have some 5 to 10 showrooms. It is not possible to him to stay in all places the same point of time in order to deal with all the customers. It's not possible. So sales executive will play a role in selling the goods. This particular person, Horn, is a mechanic, sales executive, and he's very loyal to the company, and he's very loyal to the customers also. So actually, Guilford Motor Company is having 10 employees, 10 technicians. Hearn is a very loyal person, a humble person, gentle person. He will talk to the customers in a manner that customers will be attracted easily. Because of Hearn, company is having more and more profits. Company is getting more and more customers because of Hearn technical skills, H technical skills, as well as H communication skills. Now, one day the director of the company observed that, because of Hearn, we had many customers. Tomorrow, if Hearn left the place, if Hearn left the place, if he start his own business, definitely our customers, he will try to take our customers, he will try to solicit our customers. So this should not happen. That's why, On was called for a meeting, and directors told On, just sign a non-competitive agreement. So, sir, what is this agreement, sir? You are not permitted to start business in this specified location. You are not allowed to solicit our customers. So our customers, simply our assets. My customers is nothing but my asset. So you should not solicit them. You should not, redirect them to some other location. It's nothing but non-competitive agreement. That means as long as you work here, you can communicate, you can call the customers. But once you resign from the job, you can't start a business in the specified location. Yeah, this is permitted, ma. Sale of goodwill concept. Did you remember in the sale of goods act? This is permitted. This is illegal only. So you are not permitted to do the business in the specified location. First point, and you are not allowed to solicit the customers. Okay, fine. On signed the agreement and On left the place. So at the end of the day, On came to know that okay, because of me only company had this much turnover. They are feared of me. They are really having fear about me. So that means I'm having a reputation in the market. Acha, fine. So next day he came to the company and told that, sir, I'm resigning from the job, sir. Okay, On, we will accept your resignation, but you are not permitted to do job within the specified location. Is it clear? Yes, sir. Clear, sir. The very next day, he started a company in front of Guilford Motor Company. Yeah, he incorporated a company on limited, on limited. And the company is trying to solicit the customers of a previous company. Immediately, directors came to On and told that you signed competitive, non-competitive agreement, right? Sorry, you signed that competitive agreement, right? How can you start business in this location? On is telling that, sir, I signed this agreement, correct? But my company didn't sign the agreement, right? No, the company On Limited, it didn't sign any agreement with you, sir. Here I'm not doing business. The company is doing business. That company appointed me as its employee. I'm just acting on behalf of Horn Limited. I'm not a person. I'm not a business person, sir. Are you getting my point, students? Employee H. For clarity purpose, I will call him as H. Employee H. He want to start business in the same location, but this was not permitted since he signed an agreement not to do business in the specified locations, for which he was given a consideration. For which he was given a consideration. Now that person, for doing business in that location, what cheap trick he played. He incorporated a company and he's telling that, sir, I signed that agreement. I agreed to the terms and conditions. I'm not permitted to do business here. But here I'm not doing business, sir. Company is doing business, sir. Company is doing business. Tell me, my dear students, for doing such business, is company type of organization required? No. But why he incorporated a company, sir? Simply to cheat the employer, previous employer. Yes, matter went to the court. Court pierced corporate will, lifted the corporate will, and praised on is the real person behind the company type of organization. And the judgment. What judgment was given? Lifting the corporate will. Yes, H. He violated the provisions of the contract between Guilford Motor Company and H violated the terms and conditions. Accordingly, H was punished. Sir, what about the company? It was already removed. Lifting of will, company life comes to an end. Once fraud is proved, company life will comes to an end. Accordingly, the real persons behind the will be traced out. Accordingly, they are going to get punishment. Next, where a company acts as an agent of the shareholder. So if the arrangement between shareholders and a company to effect that company will act as an agent of shareholders for the purpose of carrying on a business, the business is essentially of that of shareholders and will have unlimited liabilities. Take previous example, Guilford Motor Company versus H. The objective of H is to do the business. He want to use the will. He want to make company as its agent. That's it. Sima, company acting as an agent is valid only. Company acting as an agent valid only. But if shareholders want to make company as their agent, it is not valid. Company can do agency services, ma, simply. Today stockbroking firms like Giroda, Sharekhan, Angel Broking, all these are companies. All these are companies. They are carrying agency services. Even your bank is also agent to you. My bank, I'm having I'm having a 4,000 balance in my State Bank of India. I'm liable to another person, Gopal. Simply, by entering the option, by entering Gopal Krishna details, entering your UPI OTP or UPI secret password. So I'm asking banker to transfer funds from my account to Gopal account. Banker, accordingly, he's debiting my account, crediting Gopal Krishna account. That means, State Bank of India, SBI Limited, is an agent to me. It is providing agency services. So simply providing agency services is different. Acting as an agent to the shareholders is different. If company was incorporated to act as an agent to the shareholders, then also will be lifted, shareholders will be punished. Next one, avoidance of welfare legislations. Where a company tries to avoid its legal obligations, the corporate will shall be lifted to look at the real picture. We had a famous case study, Workman of Associated Rubber Industry Limited versus Associated Rubber Company. Actually, we had an act called Payment of Bonus Act. Payment of Bonus Act. According to this law, employer, in addition to pay salaries, he is bound to pay bonus at the end of the year. Sir, how much bonus, sir? If profits are very high, maximum bonus, that is 20% of salary. Each and every employee, so 20% of his annual salary, he is permissible. He is eligible to get that much bonus, additional income. If profits are very high, this bonus. If profits are very less, then minimum bonus is 8.33% of annual salary. You all getting my point, student? So this Associated Rubber Industry Limited is having huge profits, ma. Now the management is forced to pay maximum bonus of 20%. Suppose all the salaries of the employees during that year is, imagine, 10 crores. On these 10 crores, 20%, apply 20%, 2 crores bonus they need to pay. If profits are very less than 8.33%, that means 83 lakhs 33,000 would be sufficient. Management decided in order to pay less bonus, in order to save more profits, they incorporated another entity and they diverted some profits to another entity. That another entity is having less number of employees, so that payment of bonus act is not applicable. Payment of bonus act is not applicable to all the establishments, only when that establishment is having 10 or more employees, 20 or more employees, depending upon the nature of the business. So only 10 employees, if 10 employees or more than 10 employees, if you had payment of bonus act is applicable, imagine. So the management incorporated one company where the number of employees is less than 10. To that establishment, payment of bonus act is not applicable, and diverting this company profits to that company. So that in this company the profits they came down and company is sufficient to pay minimum bonus. This matter came to knowledge of workman of the company. So they're demanding, sir, that second company belongs to you only, sir. You incorporated that company simply to avoid payment of maximum bonus. Come on, add those profits in your company also. Add those profits in this company and accordingly pay us maximum bonus. So that is a conflict. That is a matter of conflict. Matter went to the court. Court observed that second company was incorporated only to avoid payment of maximum bonus. The real intention is to cheat employees to avoid welfare legislations. Accordingly, the court lifted the corporate will and the court asked Associated Rubber Industry Limited to pay maximum bonus. Next one, to punish for contempt of the court. Company being an artificial person cannot disobey the orders of the court. Therefore, the persons at fault should be identified. So company will definitely it won't disobey the orders of the court, man. Company is not a natural person, so hearing doing the things is not possible. It is an artificial person. It was managed by few people. So who are the people managing the company? Who is having fraudulent intention? So whenever court orders for lifting the corporate will, yes, the persons who are at the fault will be identified. Suppose court asked Associated Rubber Industry Limited pay 20% bonus. Company didn't pay it. Company didn't pay it. Now punishing company is irrelevant here. Punishing company. That means keeping certificate of incorporation in jail. Is it a sufficient punishment? No. So send the people who are at default to the jail. Now other people will be careful. Other people will carry these legislations in a careful manner. You're getting my point. So after listening to these case studies, you will come to a conclusion that so corporate will be lifted only when fraudulent actions took place. Only in the event of fraud, corporate will be disregarded. Now your intention is once again wrong. Sir, you only told no, sir. Whenever a company was incorporated for a fraudulent purpose, then only corporate will be lifted. You only told no, sir. Yes, I told you. I agree. I told you. But the point is, in genuine cases also, sometimes will be lifted. Yes. Example, sir. In the next lecture, I'm going to start various types of companies. Holding company, subsidiary company will be there. And you are going to prepare consolidated financial statements in your accounts chapter. Consolidated financial statements where subsidiary company figures will be added to the holding company figures. So adding subsidiary figures to the holding company figures, that mean subsidiary company will was removed at that point of time. See, this is a somewhat a tricky concept. You'll come to know only when you prepare consolidated financial statements. But just I'm telling you, will be disregarded not only in the event of fraudulent activity, but also sometimes in genuine cases also will be lifted. Suppose practical situation which I already faced. Two persons, husband and wife, they worked in HUL for 20 years. After 20 years of job, they came out, they started a company similar to the HUL only. They started a company, they want to do business. In a letter to the bank, they made a letter to the bank. In that letter they told we need 20 lakhs loan amount. Experience of the company is 20 years. The company was incorporated yesterday. Today they went to bank for loan. In that letter they told that experience of the company is 20 years. Really, the age of company is just one day burn company. One day back it was burned. Now, making a point that company is having experience of 20 years. Will it make sense or not? Will it make sense or not? So suddenly banker told, yes, this company is trying to cheat us, sir. The company is trying to cheat us. So find out the persons who are making such fraudulent statements, punish that person, sir. I agree with you. But here, the 20 years experience to the company, court lifted the veil. It observed the promoters of the company. They are really having experience of 20 years. So company was managed by the promoters. Since promoters are having experience of 20 years, this can be added to the company while making some statements. So this is permitted. This is permitted. See, company 1 year old, 2 years old, it is irrelevant. The persons who are the background to the company, who are the base persons to the company, if they are 20 years experienced persons, they can run company in a smooth manner, in a profitable manner. Are you all getting my point, students? Everyone. So in this case, it's a genuine case only. It's not, fraudulent intention. The statement made by the promoter, company having 20 years experience is based on the experience of the promoters. This was permitted, and court agreed to this statement. Okay, there is no problem. The promoters are having 20 years experience. Company will also have same experience. Correct only. Okay, so here we lifted. They came to a correct conclusion and they closed the case. So in that case, will was lifted. Hello students, with this, first part of the company law completed. The second part I'm going to start in next lecture. But today, in this lecture, what we discuss, sir. So it's all about introduction to the company, how company type of organization got evolved, how Companies Act was framed, how Companies Act is regulating company, and the advantages of the companies, characteristics of the companies, and later we discussed when the separate legal entity feature will be eliminated. So all these points we covered in a single lecture. This is simply introduction lecture. The next class I am going to start different types of companies. Very interesting concept. Chalo, take a small break and watch the next lecture. Hello students, in previous class we had a discussion on introduction to the company, a lifting of corporate will. In this lecture, let us discuss various types of companies. Now, categorization of companies. Very interesting topic. You can expect some 4 marks from this topic. So there can be many businesses forms that can be used to manifest ideas in order to make economic gains for the benefit of those who want to form a company to carry forward their business ideas and objectives. The Companies Act 2013 has provided for various kinds of companies that have varying compliances and advantages. The most commonplace are public companies and private companies. Private companies can further classified into one-person companies and small companies. So this is small categorization actually. When you look into the classification of companies on the basis of members, companies are categorized into two types: public, private, where you'll find public ownership in public company, private ownership in private companies. These private companies are further classified into one person company and other companies, other private companies. That means one person company is also part of private company. Next one, on the basis of incorporation of a statute. On the basis of incorporation, you can see registered companies, you can see statutory companies. And on the basis of limits, turnover, paid up share capital, you'll find a small company. On the basis of control, the companies are classified into holding company, subsidiary company, and next one, associate company. Next, on the basis of government ownership, public sector undertakings, nothing but government companies. Next one, on the basis of listing, you can observe listed companies, unlisted company, unlisted. So on the basis of nationality, where it got incorporated, where it is doing business, foreign company. So like that, we had many companies. On the basis of liability, one more classification on the basis of liability, we had company limited by shares, we had limited by guarantee, and we had unlimited companies. So we are going to discuss each and every company in a detailed manner in this lecture. Okay. So let's begin our discussion with on the basis of members. So that is our first classification on the basis of members. So we had total two companies actually, private, public. One of the private company is one person company. So we are going to discuss each and every point in a detailed manner. So private company, public company. Sir, on what basis companies got classified into private and public? Very simple. So any person from the public can have a ownership, sir. Can purchase the share, can subscribe the share, can become member of the company, can become owner of the company. It's a public company. No, 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 sir. Only private individuals, only known parties, they will only acquire ownership. Only they will become members of the company. They will control the company. They will regulate the company. In that case, it is a private owned company. So name itself is telling private, privacy, private, privacy. So from law point of view, just think, from Companies Act point of view, an association came to me. So they asked me which type of organization is suitable. I explained them partnership, I explained them company. So they know they like the concept of company, limited liability, unlimited resources, separate legal entity, perpetual succession. They're really, sir, really good concepts, sir. Hello, sir. So for starting company, for doing business under company type of organization, what are the essential things we need to follow? No, I told them, you need to follow Companies Act, total 470 sections, 29 chapters, 7 schedules. Now, what these people will do? Oh my god, lot of complaints cost is there, no, sir. So now we need to invest more time on complying the provisions, sir. We can't concentrate on the business. No, 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 sir. We will do business under partnership type of organization only. But the problem in partnership type of organization, government is not having monetary aspect on partnership firms. Government can't, they can't control them, they can't monitor them, they don't know what is going in the partnership type of organizations. So close monitoring is possible only when you register under Companies Act. So now government decided, okay, don't worry, all 470 sections are not applicable to you. We will provide some relaxations, we will provide you benefits, don't no need to comply some concepts. For example, you are not required to follow provisions related to prospectus. I'm telling you example. Why? I'll tell you. See, now government, lawmaker decided to give some benefits to you. Benefit, that means relaxation from complying the provisions. Now in this concept, you are getting benefits. These benefits are not with free of cost, with some restrictions. What are those restrictions? Since you are not required to comply all the provisions of the Companies Act, you are not required to comply all 470, only few of them applicable to you. Few relaxation will be provided to you. So that's the reason, since we are having monitoring ability on you, so we can monitor you. But since we are giving you more relaxations, you can't go to public. You can't make offer to the public. You can't invite public from subscribing your securities. You can't ask them to deposit their money into your entity. Then only we can provide you certain relaxations. If it is okay, then come and form under private company type of organization. Private company. So this is from law point of view. We'll provide you some relaxations. From company point of view, from association point of view, think about association point of view. So I asked them, sir, just tell me, tomorrow, if you want to raise more and more funds, will you offer shares to the public so that new persons will become owners of your entity? In decision making meetings, they will also come and participate. They will also take decisions. So you need to value their decisions. Or will you issue shares only to your known members, to your family members, to your relatives, to your friends? Just answer me, sir. Do you want public should form part of your ownership, or only your family members, only your known parties? They told me, sir, only known parties, sir. We don't want, we want to maintain some confidentiality, sir. We want to maintain some privacy, sir. We don't want public to come and join in our company, public to participate in our ownership rights. So we, limited people only, will invest money in the company, sir. We don't want any public involvement. Acha, fine. Then, as you told, so you are not inviting any public into your company. Private company is suitable to you. Sir, in future, if I want public, sir, then you convert private company into public company. Sir, you just told that, limited number of members. So only limited number of members can form a private company. Sir, that limit is how much? 200. That limit is how much? 200. Are you getting my point? Sir, okay, fine, sir. You told that shares like goods, they're freely transferable. Now, today, we 10 people formed a company. We 10 people are managing the company. No, we 10 people are the owners. We 10 people are the directors. So, we are investing the money. We are doing managing the business. Suddenly, if any member want money, sir, without our intimation, if that person sells shares to some unknown person, so that unknown person will enter into the company, no, sir. That unknown person will come to know all our decisions, no, sir. Thereby, confidentiality, privacy gets affected, no, sir. You are asking me that doubt. That's why, I told you, don't worry. Shares are transferable properties, like goods that transferable. But in a private company, in order to protect your privacy, I am placing some restrictions on the transfer. The restrictions means what, sir? Is it a prohibition? No, no, no. Transfer is allowed. It's not prohibited. There is no ban on the transfer of shares. Transfer is permitted, but with some conditions. Acha, sir. What are those conditions, sir? If any member wants to leave from the company, he need to write his intention of leaving company in writing. He need to write simply. He need to express his opinion. He need to specify his intention of leaving the company to directors in writing. And board of directors will take the shares of outgoing member, and board of directors are going to offer those shares to the existing members. That means the outgoing member should offer his or her shares to the existing members. Sir, at what consideration, sir? That consideration will be fixed by directors. Then, sir, it is a subjective matter, no, sir. If directors fix a high price, it's a loss to the existing members, gain to the outgoing members. Or if directors fix very less price, then it is a loss to the outgoing member, no, sir. So that's the reason, lawmaker told a point at a price fixed by the directors, but, verified by the auditor. Auditor, company auditor, an independent person. Who is a company auditor? An independent person who will express opinion on the financial statements, whether financial statements express true and fair view, whether financial statements present correct picture or not. An independent person will verify the calculations done by the director, will verify the how the price got fixed, and will express opinion. Yes, the price is this much. Now, when an independent person is expressing opinion on the price matter, now tell me, is it related to the fixation of price? Do you think is it done in a biased manner? The answer is no. The answer is no. Are you all getting my point, students? So now transfer of shares is permitted, but it is subject to restrictions. First one, the person who is willing to transfer shares, he need to communicate the matter with directors in writing. He need to transfer shares to the existing member. Sir, if existing members are not having funds, then what is the solution, sir? Don't worry, board of directors will select an outsider. To that outsider, you need to transfer shares. Directors selecting a person, that means they had a trust on that party will maintain a privacy, that party will maintain confidentiality. So transfer shares to that person at a price fixed by the directors, verified by the company auditor. Now tell me, my dear students, transfer of shares allowed or not allowed? Allowed, subject to some restrictions. The main reason why we are placing restrictions, to protect confidentiality, to protect privacy, secrecy of the matters. Next one, sir, you told that limit of number of members is 200. So if I want more than 200 members, sir, then convert into public company, or first of all incorporate a public company. Go in the form of public company only. Go in the name of public company only. You all getting my point, students? Everyone. So maximum in a private company you can have a 200 only. However, while calculating 200, certain people should be excluded. Certain people should be excluded. See, don't ask me the logic, sir. Why only 200? No, under old act, under old Companies Act 1956, the actual limit is 50 only. Under new act, it was enhanced to 200. So 200 is the limit fixed by the authority. So up to 200, you are allowed to do business under private limited company. Beyond 200, you are bound to convert into public company. Is everything clear, my dear students? Clear? Fine. Next one. So while counting 200, certain people should be excluded. Sir, who are they, sir? First one, employees. Employees. See, my company is a startup company. My company will grow only if my employees work smarter, in an intelligent manner, in a smart manner. So today, any person will work only when we pay him accordingly. If you pay more, he will work, he will deliver more and more output. Yes or no? So today you are spending many hours for study, you are expecting more marks. So, sir, studying 10 hours, studying 1 hour will get same marks only, sir. In that case, everyone will study only 1 hour. Yes or no? So when you give more, your employee will deliver more output to you. But being a startup, you will also face some financial difficulties. You may not have sufficient funds. Now, an employee came to you, a person came for an interview. So he's a talented person, intelligent person. He expected a pay of 20 lakhs per annum, but you are having a capability to pay 12 lakhs only. Now what you can tell, sir, your package is 20 lakhs, but in cash we'll pay you 12 lakhs. Remaining 8 lakhs we will allot you shares under ESOP, employee stock option plan, sir. So these shares will be allotted to you when our company once start production. So these shares will get more and more value. At that point of time you can sell these shares, sir. And moreover, taking these shares, you are also part of our ownership. You are also part of our owners community. So in every general meeting you can participate, you can exercise voting rights, and you are also eligible to claim dividends. So this is an additional benefit to you, sir. So tell me, my dear students, private company for attracting more talented employees, if they had sufficient resources, they will pay more money. If they're facing any kind of financial difficulty, being a startup, so it should compromise at one point of time. It should be compromised. So both employee and company will come to an agreement. Yes, according to that agreement, company will pay something in cash, remaining in the form of shares. Now today, employee became member of the company because of his employment. Do you think a company will have a limited number of employees, only 50, 60, 70? No, a company may have, thousands of the employees. If employees are included in 200, now tell me, to what extent we can issue shares under employee stock option plan to the employees? To what extent, sir? Maximum 200 only, sir. No. At present, I'm already having 10 owners. Now, to what extent I can give shares to the employees? Only 190. Then what about the remaining employees? So paying salaries, paying bonus, giving promotions, allotting shares at a concessional prices, all these are motivational factors which makes employee to work more and more, smarter and in intelligent manner. So this is possible only when I give them. Imagine if this exemption of counting employees is excluded from 200. If this exemption is not there, now I need to count more. No, now I'm restricted in issuing shares to employees under ESOP. Now tell me, my dear students, in this case, just a second, there is a disturbance. Just a second. Okay, students, there is a small disturbance. Okay, fine. Now listen carefully. So now I'm giving shares to the employee. So employee is becoming member of the company. If I include employee in the count, now what happened? I am restricted to give shares to employees up to 200 only. And again, considering my members, suppose my members are 40 or 10, for example, 10. Now I can go up to 190 employees only. You're getting the point, ma? So simply to make employees as a part of ownership, this concept, whatever shares you issue to the employees, those members are not counted for the purpose of 200. Not counted for the purpose of 200. So making employees owners, what is the advantage, sir? See, today company can survive only because of employees. If employees are not performing well, take a software company example. If employees are not giving proper programs, do you think that company will survive in the long run? No. And one more point, my dear students, concept of perpetual succession is there to the company, not to the individual. That means today, if I joined in any organization as an employee, no, I'm 27 years old. I joined in an organization as an employee. How long I can work in the organization? Maybe some 33 years. So after attaining age of 60 years, no, I'll be superannuated. That means I need to come out of the organization. Retirement in your known terms. So basic terms, retirement. So after coming out of the organization, what about my count, sir? During my employment, I got a share. But because of attaining 60 years, I'm coming out of the organization. Now tell me, am I included or excluded, sir? The answer is excluded. You are not counted for the purpose of 200 even when you are during in the employment or after getting out of the employment. Once you become member during the employment, you will not be included during your employment period, even after employment period also. Are you getting my point, students? So while counting 200, number of members 200, some people are to be excluded. First one is present employees who become members during employment period. The next one is, past employees who became members during their employment. Next one, you will get a doubt. Sir, first I became a member of the company, sir. Later I became employee of the company. Now tell me whether I'm included or excluded. Included for the purpose of 200 or excluded from the purpose of 200, sir? The answer is included. Now, when you become member, during employment or before employment? During employment, if you become member, you will be excluded from the count 200. So before becoming employee or after retirement, if you become member, you will be counted for the purpose of 200. So if counted, then I can't go with that number. Suppose today I'm having 199 members. If I include this particular person, I can't issue shares to someone else. I can't issue to another person because it's full, house full. Simply 200 members completed. Now you can't go beyond 200 members. So one more exclusion is also there. That is joint shareholding. If two or more members holding shares jointly, holding a share certificate jointly, that means claiming ownership jointly, co-owners, joint owners. In that case, you should not count all the members, you should count only one. Example, sir, A, B, C, three people holding a single share certificate jointly. Now, for the purpose of count 200, they are not treated as three members, they are treated as only one member. Because only one is going to take decision, that's it. Only one member can cast vote. Only one member can claim dividend. Company won't pay dividend to all three persons. Three will get a same dividend, three will get a equal voting. Only one time they will get voting. So for the purpose of count 200, employees are excluded. Next one, joint shareholders are counted as one only. And I already told you these companies are prohibited from inviting public to subscribe the securities of the company. So in any private company, if you find these three conditions, sorry, in any company, if you find these three conditions, it's a private company. Let's start our discussion, in material reading. Private company means a company having a minimum paid up share capital as may be prescribed and by which its articles. So today, minimum paid up share capital not yet prescribed. When originally act came into the picture, the minimum paid up share capital is 1 lakh. So what is this paid up share capital, sir? See, for any business to start, to continue, they need some funds. Who will invest those funds? Owners. So a company can start business with this much funds. Say for suppose 1 lakh, private company initially it is a 1 lakh rupee. In 2015, they deleted word 1 lakh and they told we will prescribe from time to time. But so far, they didn't prescribe anything. They didn't prescribe anything. That's the reason, many private companies will follow the concept of 1 lakh only. So 1 lakh rupee. So private company minimum paid up share capital 1 lakh. This is as per custom, as per practices, but as per act, as per rules, today minimum paid up share capital was not yet prescribed. And by which its articles contain three conditions. Sir, what is this article, sir? Every business arrangement requires an agreement. You see, partnership firm, they had an agreement. We call it as deed. So deed is nothing but agreement between the partners. In a company type of organization also, they had a deed, they had an agreement. But that agreement is named as Memorandum of Association, Articles of Association. So these two documents are simply, contractual agreements between company and members. I'm going to explain in a detailed manner when I teach you section 10 of the Companies Act. Under section 10 of the Companies Act, I'll explain you the importance of MOA and AOA. But for the time being, articles means it is an agreement between company and the members. So this deed should contain restricts on what, sir? A right to transfer of shares. Once again, I'm telling you, transfer of shares is not prohibited. It is freely allowed, but got restricted. Limits the number of its members to 200. In case of one person company, being a being a private company, here the minimum number is 1, maximum number is also 1. Prohibits any invitation to the public to subscribe for any securities of the company. So the private company, in order to protect privacy, and moreover, it had various advantages. No need to comply all the sections. Certain relaxations were given. So to get these relaxations, you are prohibited from inviting public. First of all, public won't come to you, and you should not ask public come and invest in our securities. You should not ask public to come to invest money in their securities of a company. My dear students, just a small question. How can we distinguish whether it's a private company or whether it's a public company? Come tell me, my dear students. Is it a private or a public? How can you tell? Many will answer me that, sir, private company name ends with private limited. Public company name ends with limited, sir. Fine, correct. But if it is a government company, I'll explain you government company in the next lecture. Government company, even though it is a private limited, it is not required to use word private in its name. Any of you, what you think? So private company name ends with private limited. Public company name ends with public limited. But if it is a company, government company, it is not required to use word private in its name. Then you may tell me, sir, number of members, sir. Okay, ma. In my company, there are 150 members, ma. Now tell me, is it a private or public? A public company, 7 members, minimum 7 members required, maximum unlimited. In my company, there are total 150 members are there. Now, can you categorize whether it is a private company or a public company? Sir, no, sir. So the answer is you just open articles of association of a company. You just open articles of association of a company. In that articles, if you find restricts, limits, prohibits, then it's a private company. Show you one example. So just see it. So this is one example, memorandum of association and articles of association of GMR Enterprises Private Limited. Can you see this? So this is the certificate of incorporation, ma. So as I told you, where is the company? Sir, it is on a piece of paper. It's just a piece of paper issued by the authority. So this is the original certificate of incorporation. Form 1 under 1956 Act, certificate of incorporation is issued under form number 1. So this is memorandum of association. Next one, articles of association. Just wait. The articles of association of GMR Enterprises Private Limited. So company to be a private company. Section 2 clause 68 of the Companies Act and minimum paid up share capital is 1 lakh or such higher paid up share capital as may be prescribed accordingly. The right to transfer shares of a company is restricted. The number of members of company exclusive of, excluding following persons, the count is max 200, limited to 200. And any invitation to public to subscribe for any securities of the company is also prohibited. So in a AOA of a private company, in AOA of a private company, you will find all these three conditions. Suppose if you take any public company, Infosys OA, Memorandum and Articles of Association of Infosys Company. So this is the Articles of Association of Infosys Company. So here you had a interpretation of many words. You can't find that words, restricts the transfer of shares, limits the number of members, prohibition on invitation to the public to subscribe securities of a company. This wording is not there. So in order to trace whether it is a private company or a public company, don't tell the reasons like, private limited, public limited. So the correct answer is AOA. If AOA had three conditions, it's a private company. Now we had some special points. We'll see here. Counting of number. Where two or more persons hold one or more shares in a company jointly, they shall be treated as a single member. So joint shareholding, they will be considered as one only. Persons who are in the employment of company shall not be counted. Persons who have been formerly in the employment of company were members of the company while in that employment and have continued to be the members after the employment got ceased. So simply, past employees, retired employees who became members during the employment period. Counted or not counted? Not counted. So existing member, sir, but joined as an employee. So first of all, he's a member. Next, he became an employee, sir. Counted or not counted? The answer is counted. Next, we had some more points. So for private limited companies, the minimum paid up share capital is not yet prescribed. And coming to the Section 8 company, these are the companies with charitable objectives. Just keep this point pending. I'm going to discuss about Section 8 company in the incorporation chapter. Next, additional points. A restriction on transfer of shares in a private company are usually included in the articles of association so as to be applicable to all members alike. This restriction is not a prohibition, it's not a ban on any transfer of shares. Transfer in circumstances not covered by specific restrictions is possible. So, using articles of association, you can restrict, you can place additional conditions. You can place additional conditions while transferring these shares. So everything is possible in a private company with respect to transfer of shares. Even if private company AOA contain prohibition on transfer, that provision is void. So transfer is allowed but with some restrictions. These specific restrictions prevent anybody or everybody from acquiring the shares of a company by transfer. Yes, so simply outsiders can't become members of the company. Sometimes, outsider to become member of the company, they will try to offer more and more price. No, actual share price is 1,000 rupees. They will offer 1 crore. They may offer 10 crores in order to become member of the company. Because of these restrictions, outsiders are prohibited from acquiring the shares of the company. Accordingly, the articles of association empower director to decline registration of transfer of any share, whether it is a fully paid up or partly paid up, by exercising their absolute discretion over such matters. So 100% discretionary power lies with the directors. Directors are the people who manage the company. They know what to do, what not to do for the welfare of the company, for the you know profit objectives of the company, for the growth of the company. They know what to do the things. So articles is giving complete discretionary powers to the directors. Suppose if directors want to misuse the provisions, you can go to the court. You can file a case in the court. So now, court will investigate the matter. If in the opinion of judge, if it comes to know that directors, they are simply using these powers, they are misusing the powers, then you already know the solution is so judge will cancel the powers exercised by the directors and the contention of the directors will be eliminated. So there it is not a point. Next one, An additional restriction not contained in the AOA but in a private agreement between shareholders which places further obstacles in the way of transferability is not binding either on the company or on the shareholders. See, this is nothing but a collateral agreement between the shareholders. Because of AOA, company is bound to the members, members are bound to the company. Tell you, suppose there is an agreement between you and Shrestha. As per the agreement, you are having an obligation to pay fees. We are having an obligation to provide classes. We will provide classes to you. You need to pay fees. Yes or no? So to this agreement, we are bound to you. You people are bound to us. Outsiders are not bound by the agreement. Are you getting my point? Now, AOA, it is an agreement between company and members. Members are bound to the company. Company is bound to the members. Now, placing some additional conditions where, sir, we are placing additional conditions, not in the AOA, but it's a private agreements. Private agreements between whom? Two shareholders. Now, this agreement, shareholder one, shareholder two, the agreement between shareholder one and shareholder two, do you think because of this agreement, company is liable to the members? Not at all, ma. Not at all. It's a funny thing. Why funny thing, sir? Suppose, I'm entering into an agreement with you. In this agreement, I'm making a statement that, Pradhan Mantri Modi ji is liable to pay 2 crores to us. So, to this condition, is Modi ji liable? Not at all. He's a stranger. So, similarly, an agreement, a private agreement between two shareholders will not affect the clauses that are contained in the AOA. Next, the cap on number of members do not affect the number of debenture holders. Yes, there is a count, maximum 200 members. Members means owners of the company. Debenture holders, they are like creditors. They are finance creditors. So that a private company can have. So there is no limit on having debenture holders. You can have thousands of debenture holders. A private company cannot make a public offer of securities, which essentially means that a private company can collect its capital through a private approach by giving opportunity of investment to the persons approached and not to the others. That means you can't go to the public, but whoever comes to you, whoever interested to make investment in you, you can permit them. If you are confident that they will maintain confidentiality, they will protect secrecy, so if you have confidence, you can have them in members team. Next one. So this is all about a private company, now coming to the public company, the definition is very clear. Public company means a company which is not a private company. As I told you, we had only two companies, private, public. So a company which is not a private company is nothing but a public company. And so that means one more condition you need to satisfy. As the minimum paid up share capital as may be prescribed. How much, sir? So far not yet prescribed. Previously it is 5 lakhs. Every public company should have a minimum paid up share capital of 5 lakhs, but so far, after that they removed the condition of 5 lakhs and they wrote a point as may be prescribed, but so far that limit was not yet prescribed. And we had one more public company, this is a separate condition. Any private company, if it is a subsidiary company of a public company, shall be deemed to be a public company. Sir, what is meant by subsidiary? I'll explain you in the next class. I'll explain subsidiary company in the next class. But subsidiary means a company controlled by another company. A company controlled by another company, or it's a company in which majority of the stake, majority of the paid up share capital was held by another company. That another company is the holding company and our company is a subsidiary company. Suppose TCS Limited, it's a public company, is there? It is having 60% paid up share capital in, for example, Tata Iron Private Limited. Private Limited. Example sake, I'm telling you, Private Limited, this is the company. Now, majority, that means more than half of the stake was held by public company. So this is a private limited company by virtue of AOA. However, this is a private company by virtue of AOA. This is also deemed to be a public company. Accordingly, it is required to follow all 470 sections of the Companies Act 2013. Entire act it should follow. No relaxation. Now you may ask me, sir, this is a deemed to be a public company, sir. So can this company offer shares to the public? No. Why? Its article contain a provision. Its article contain a provision that company is prohibited from inviting offers from the public for purchasing or subscribing the securities of a company. Sir, but you call it as a public company, no, sir. I called it as a public company for the purpose of applying provisions of the Companies Act. Sir, simply, these kind of companies won't have advantages of a private company, won't have advantages of public company. It will have only disadvantage of a public company and disadvantage of a private company. Why? Because public company can utilize funds only for the stated purposes. A public company which is getting money from the public can utilize funds only for the stated purposes. It can't change that objective. In order to change the objective, public at a large should give approval. Public members, members, all the members should give approval. Definitely a complicated thing. Definitely a complicated thing. Not possible, first of all. You all getting my point, students? But private company, since the number of members is very less in number, you can easily change the objects. You can alter the powers of the company. Objects of the company can be easily altered. Now, a public company which is prohibited from carrying many activities, what this public company will do, it will try to incorporate another private company in which it will have a majority stake. First, it will divert the funds to the private company, and that private company will try to use funds in a manner which a public company is not allowed to do. Are you getting my point? Sir, what Companies Act is doing, sir? A private company, no. Basically, it will have some relaxations. So, alteration of objects, it's a very simple thing in a private company compared to public limited company. As a result, the main objective of provision is getting violated. So, simply to protect public funds, to control public company activities. So, what lawmaker decided, so whatever funds you are diverting to the private company, and if that private company is subsidiary to you, even though it is a private company by its articles, we are not considering it as a private company. We assume it as a public company. Accordingly, what are all the provisions applicable to you, public company? The same provisions are going to apply to the private company also. Understood, ma? Interesting concept. So, a private limited is a wholly owned subsidiary of AB Limited, a public company incorporated under the Companies Act 2013. A private limited wanted to avail exemptions as provided to private company. In this case, since a private limited is a subsidiary of AB Limited, which is a public company, therefore, this private company will be deemed to be a public company and will not be allowed to avail exemptions provided to a private company. So very simple. What is a public company? Two companies are treated as public company. One is which is not a private company. And next one, which is a private company, but if it is a subsidiary to a public company, that means a company which is not a private company, public company. A company which is subsidiary to a public company is also a public company. By articles, if it is an by articles of association, even though it may be a private, but becoming subsidiary to a public company, it will lose the character of private company. It will lose all the advantages being a private company, and it will be treated as public company. Clear? Next one, very small topic, that is one person company. One person company, this is an innovative concept, ma. Why innovative concept? For a company, tell me how many members are required, ma? Sir, minimum two, sir. In a private company, minimum how many members required? Two. Max 200. Forget about it. So for forming a company type of organization, minimum two members needed. Yes, correct, sir. Two intelligent people will never work together, ma. Ego problem. So they will try to work in a unique manner. So every person will have a unique thing. And two foolish persons will never work. They won't work, first of all. Now, a person having innovative skills, he want to start a business, whereas for company, minimum two people are required. As a sole proprietorship, he is having unlimited liability. What to do? He's thinking. He's sitting and thinking. So can't only a single person. Is it possible to me to start a company or not? Like that, he's thinking. No, another person is required. He is ready to bring his friend. But For every decision in a company, board of directors approval is required, members approval is required. So we don't know that other person will cast vote according to this person or not. So this person is having a decision, suppose, to change powers of the company, to change objects of the company, to increase the scope of the company. So this person is thinking, the second person should also give consent, or else it is not possible. So practical difficulties, having two members, I'm having a unique thinking capability. So if I bring another person, if any conflict arises between me and that person, instead of doing business, I need to concentrate on our relationship, on my relationship. And moreover, because of this reason, many people, they are not incorporating the company, they are doing business under sole proprietorship type of organization. Again, sole proprietorship type of organization means informal commercial establishment. The government is having no monitoring capability over those people. So to attract them, to form them as a company type of organization, in 2005, a committee named Irani, Dr. JJ Irani committee gave this idea. So in order to attract small business people, small players in the economy, so to motivate them and to get them and register as a company, we should provide a concept called one person company. So what is the beauty of this concept? In one person company, minimum one member, maximum one member, single member can start a company. And advantage, that single member can also act as a director. So here minimum number of members one, minimum number of directors is also one. And member can act as a director also. So it's a, first of all, formal commercial establishment. He will get a limited liability advantage. Are you getting my point? And public point of view, there is a company. So dealing with company is safe only. Company won't run away like natural persons. So one person company. One person company means a company which has only one person as a member. The benefits of being OPC are the same benefits for a small company. Small company, I will explain in the next lecture. Points to be noted. Only resident individuals can form OPC, and the same person cannot form more than one OPC. Before Ma, it was five companies. He can incorporate five one-person companies, but later, they removed five and they told only one. Hey, resident individual, you can have only one OPC in your name. You can become member in only one OPC at any point of time. And this company is going to have minimum one director. Member itself can act as a director, and it shall have one nominee. Since one person company, only one person is a member of the company. If anything happens to this person, then who will be the owner of the company? Who will be the member of the company? Because if two or more persons are there, anything happen to few of them, so the rest will take care of the activities of the company. What about only a single person? If anything happens to that person, then who is going to run the company? So safety measurement point of view, person, you should provide a nominee. You should provide another person as a nominee. Now this nominee, in the event of your death, in the event of your inavailability, in the event of your death or inavailability, this nominee will become member of OPC and he will run the business. So who cannot act as a nominee for more than one OPC? So who can act as a member of the OPC? Who can act as a nominee of the OPC? All these points we are going to cover in incorporation chapter. This is just a basic thing. And you all know OPC is a private company. A private company with minimum and maximum number of members is one. It is nothing but one person company only. The name of OPC, it ends with like this. Yesterday I incorporated one OPC, Sri Honey Enterprises One Person Company Private Limited. This is the name of the company. OPC which is satisfying criteria given under section 2 clause 85, then it will be regarded as a small company. OPC can't be converted into a private company, can't be converted into public company for a period of 2 years from the date of incorporation. But as per the latest amendments, this condition is not applicable, This condition is no more applicable. So that means, what is the meaning of this point? You can convert OPC into a private company. You can convert into a OPC into a public company after 2 years of incorporation. Right now, this condition is not there. You can convert OPC into other company. How, sir? In OPC there is one member. Add another member. Happily, you can form a private company. or add 6 members, happily you can form a public company. In OPC, we had one director. Add one director, you can convert into a private company. Or add two more directors, you can convert it into a public company. So in a public company, minimum 3 directors. In a private company, minimum 2 directors are required. Members in a private company, minimum 2. In a public company, minimum 7. And OPC, it is having a turnover limits, paid up share capital limits. Paid up share capital, how much? 50 lakhs, turnover 2 crores. I'm not explaining this point in a clear manner because these conditions are not there as of now. Before, one person company, you are allowed to do business under one person company, up to paid up share capital of 50 lakhs. When paid up share capital is increasing beyond 50 lakhs, then you are not permitted to do business under OPC. Compulsory you should convert it into another kind of company, like private company or public company. If your turnover is crossing 2 crores, then you are forced to convert into a public company or a private company. So these are the limits. How long I can do business under OPC, sir? How long it means? First of all, paid up share capital should not cross 50 lakhs, turnover should not cross 2 crores. So what happens if I cross these limits? You are not eligible to continue business under OPC type of organization. You are forced to convert your company into other kind of company. Since no, you may ask me reason. Why, sir? Why? As an OPC, it is relaxed from many provisions. Relaxation was provided under many provisions. Sir, in a previous case, private company also, it is not bound to comply all the rules and regulations you told, but you didn't tell any example, sir. The example, ma, when you make public offer, you need to issue a prospectus, ma. Prospectus is a document. It defines what a company is, company past achievements, company future, future targets, company present performance. Everything you'll find in a document called prospectus. Whenever a company is making public offer, company should issue a prospectus. Company should comply all the applicable sections. A private company, since it is prohibited from making a public offer, it is not bound to prepare a document called prospectus. It is not bound to comply the rules and regulations. Are you all getting my point, students? Example. And coming to the company concept, every year company has to conduct general meetings, annual general meetings, where members will meet, where members will take decisions with respect to the future. So meeting means how many members required? Minimum 2 members required. In a OPC, maximum how many members you will find? Only one. Is it possible to conduct meeting for one person? That means meeting provisions, general meeting provisions are not applicable to OPC. So that means almost some 20 to 25 sections are not applicable to OPC compared to public, compared to private. So we are giving more freedom, yes or no? You're getting my point. So more freedom will be given with some restriction. One of such restriction, your paid up share capital should not cross 50 lakhs. Your turnover should not exceed 2 crores. What happens if these limits got crossed? What happens if these limits got exceeded? The answer is you need to convert. Right now, not there. OPC cannot undertake financial activities. OPC cannot carry investment activities. The sole objective of OPC is to promote entrepreneurs. Only business organizations should be permitted under OPC. So for carrying financial activities, investment activities, giving loans, borrowing loans or investment in the securities, you are not permitted to incorporate OPC. You can carry out either under private company or you can carry out individually. And we had a note point, detailed discussion about OPC, conversion of OPC into private companies will be covered in the incorporation of companies chapter. So for the time being, OPC means what? It's a private company with minimum and maximum number of members is 1. Understood? Everyone. So minimum directors 1. It will have a concept called nominee in the event of non-availability of a member, death of the member. In that case, nominee will act as a member of the company. But who can incorporate OPC? What are the conditions to be satisfied for incorporating the company? What are the restrictions on one person company? What kind of business a OPC is prohibited to do? Everything will be covered in a detailed manner in the next chapter. So by this, in this class, we discussed what is a private company, what is a public company, and what is a one person company. Just give one time reading and watch the next lecture.